Secker here. Well, look, welcome back to another trading session here in the den. I've got to tell you, it is absolutely sweltering outside, 26 degrees in the UK at the moment. And today we're going to be looking at the 180 phase changer strategy. Now, it's one of the trend-based strategies that's bundled with smart charts. It's a strategy I've gone through in great detail in this video here. Now, if you haven't seen that, I highly suggest you go and get yourself acquainted with how this strategy works. As a brief summary, however, this strategy is effectively searching the available markets in smart charts for a trading opportunity for you. Using a long buying opportunity as an example, smart charts is searching for the following conditions. It's looking to see if the 8-period moving average is above the 20-period moving average to signify a bullish market. It's then examining the chart for a ring low bar pattern. That's to say 2 consecutive bars where the second of the 2 bars has a lower high and a lower low than the first bar. Once this second bar has closed, if these conditions continue to be met, smart charts will automatically suggest entry, take profit, and stop loss levels for you. And you'll see the buy or sell button flashing. To actually enter the position, all you need to do is click the flashing buy or sell button, in this case the buy button here. So that's an extremely brief summary of how the strategy works. Of course, it's down to the trader to determine for themselves if this signal is valid and if the current, and this is important, the current market conditions are indeed suitable. So let's get down and dirty and place some trades. I'm going to look, first of all, I'm going to go and show you where you can find the 180 phase changer strategy if you're not used to that. Simply, we click top right on any of the windows in smart charts, which will either say no strategy or it'll be running or looking at one of the strategies in that window. Of course, move along, third column down, we're looking at the 180 phase changer. And remember, like the trend wave strategy, the 180 phase changer is a real phase 1, phase 2 type trending strategy. For those of you that are aware of what the phase 1 and phase 2 pattern system means, what it really means is if the market is moving with the trend, because markets move up and down, so like breathing patterns. So when it's phase 1 and you're long and it's an uptrend, of course, that's when the market's moving with the trend. Then you have that counter trend movement. We call that phase 2. That's kind of pulling back to the trend. And then again, resuming back to the trend again is back to phase 1. So it's phase 1, phase 2, phase 1, phase 2. So breathing in and out, all similar natural cycles in science. So if you look at the chart now, you'll see that these phase 1 movements, imagine you're looking at the 4-hour chart, which we are on the Euro Kiwi, of course, which we are. And you'll see this is that phase 1 movement. This is that phase 2 movement. And this is that phase 1 movement. So let me kind of see if I can't kind of draw that on the chart here as a bit of a freehand. Where is it? There it is. Okay. So this is as we know, this is my phase 1, right? That's my phase 2. And then this is my phase 1 again. Okay. Fair to sort of say that's and we aren't expecting to get fair. You can see it's quite nice and simple swings here on the 4-hour chart. So we can see that over time. Now, just look where we are. Now, you'll see that smart charts doesn't care about phase 1, phase 2 when I'm telling it just to look at the 180 phase changer. So this is where I want you to kind of bring a bit of discretion in. I want you to say, well, look, if this is phase 1, any positions it's calling down here, notice the red spot is where my stop loss is. Notice where the blue spot is where I enter the position, and notice the green spot is where I take the profit. So you can see this one, this one, this one, and this one, all perfectly, and this is important, perfectly were called, were consistent with the phase 1 and 2 movements. So if we took any of those 4 trades, they would have all been successful, profitable trades. Notice then as we're getting towards the end of phase 1 and into phase 2, you would have nipped a profit on the last one here. Look, my lines aren't perfect, of course, nothing is, but you would have pretty much been profitable on all of these trades because what you notice is the strategy calls, and you've got one of 2 choices, long or short, but the strategy is calling shorts consistent with this phase 1 movement. Then you've got a phase 2 movement where you wouldn't be taking any shorts, and coincidentally there isn't any called. But then you're back into phase 1, and notice, because smart charts is not aware of the time horizon you're looking at, you'll notice it's because it's simply looking at that pattern. It says, well, okay, so the price is just above here, but it's calling these two long, depending on where those closing prices are. That would be a messy signal. The reason that's a messy signal and unlikely to work out, and coincidentally didn't work out, notice if you'd have gone long here, you'd have never reached these targets and you'd have been stopped out, because you're kind of taking a 180 phase change with short strategy when you're in that phase 2 movement, which is not the smartest movement in the world. So we're trying to go long in when really this phase 1 is now kicking back in. So your phase 1, you'd be short, taking any of these short positions here, great. Take the long one, big mistake, wouldn't want to do that. Take the short ones, makes sense. Now, when it rallies back, fine, that's just phase 2 resumption, and then phase 1 continuation. Taking any of these, bad idea. But this one, again, is like these. Again, it's the strategy is consistent with the trend. I hope that makes sense to you while you're watching this, because whilst smart charts can show you what patterns, are matching that 180 phase change strategies, and it will throw it on the chart and show you what to do. You've also got to use your brain and say, well, hold on a second. Yes, if I'm taking short positions that it's calling and it's consistent with that phase 1 movement, great. I'm not going to take any longs here because the overriding trend, of course, is short. So any of these pulls here would be a mistake, because why would you go long in a downtrending market? Wouldn't be a really clever idea. But then, of course, you can see smart charts is flipped. So the signal is consistent with the overriding trend and the phase. Very important. So trend, tick, phase, tick, strategy, tick. So now let's use smart charts. And again, loving this grab tool, so I can just now bring it to that part of my screen. The reason I'm doing that is I'm just setting this up for the camera for you, because you'll see that when I look at obviously the selection panel of long or short, and you'll see it colors the chart accordingly, if you notice. So if I hit the short button, obviously is the one it's suggesting it's consistent with the strategy. It's also consistent with phase 1. This is phase 1, and this is phase 1. This is phase 2. We want to be going short in phase 1, nothing in phase 2, short in phase 1. Notice here that we now know why we would have not taken these, but we now know why, of course, we will take this trade. So this is the Euro Kiwi. We hit the short button in smart charts, and you'll see straight away, and I think this is a really important tool in smart charts. For those of you that are beginners, look, and I know you're not going to have $1 million in your trading account. It doesn't matter how much you have in your trading account. It matters it's money that you can afford to trade with, that you can afford to risk, and that you can afford to learn from, and most importantly, build your skill set. So don't let the numbers overwhelm you. What's important is to recognize how much risk are you placing on the trade. Notice when you look at smart charts here, it's saying, look, my short, and notice this, any of these trades up here would have had the same strategy rating in a phase 1, calling down, as this is. Your stop is 93 pips, and it also translates it in smart charts into monetary terms. So you know, okay, well, I'm risking $14,000. I'm selling 25 lots. It's giving me my take profit, my sell entry, and my stop loss in values displayed on the chart. You can see on the left-hand side. And of course, those values displayed in the ticket. So if I move anything here, it will obviously move the values on the screen. So I'm risking much more, or it will just basically move it in at the same time in the order ticket. So I've got control of both, but the reality is I want to leave it where it is. So I'm going to kind of cancel that. I want to reset those values and just hit short again, and then it's put it in for me. The setup is perfect. It's a 1-to-1, which is exactly how a 180 phase changer should work. We're in phase 1 as we were prior. So we now know that what we're doing is consistent with what we did here, and all those 4 trades worked out well. In phase 1, it's a short trade. We've got the right indication of the signal, and you've got great certainty in that. You wouldn't have in these spurious ones up here, because of course it's calling a long in a short market. It doesn't make any sense. Brain must filter that stuff out. So that's the real difference between using a really clever scanning tool like this to find it, but then applying the training you've had. Remember that trader cycle that we've covered in other videos. If you haven't watched the trader cycle video, I highly recommend that you get into that, because it really starts to build up the foundation of how the trading methodology that we teach in smart charts and how that works. It's a layered approach from really foundation levels to then really build up to give you some precision. And as you can see here, you've now seen some of those levels, some of those important distinctions, which means that if we then hit the green button here, it then loads that trade into, as we know, the trade section of smart charts. It's ready to trigger. If we look, the sell entry is close when it pulls back and touches that sell entry we're in. We could have entered that trade at market if we wished. It's possible that we may have missed that, so we can update our values here. It'll give us a sell entry. See, notice what I did there. I can see the market's moved on. I can take my sell entry and one sec. Yeah, my price is here. And that sell entry is great. Okay, that's what I want. So all I did is got a requote for a better price there. Sell trade is in. And we can now leave that into our trade section. Of course, that will then stick, that'll just sit in my pending, waiting to go, and I can amend that trade should I want. But I'm not going to do that. I'm going to see what other opportunities I have. It is 180 phase changer hunting season, so let's see what we've got. So that's the Euro Kiwi up there. I hope that made sense as to why and how I amended that trade. Let's look at the other options we've got. We've got the Kiwi dollar. Great, simple movement. Look, this one's already moved. We're not going to catch this. I very much doubt it's already on its way to victory. So we're a little bit too late to get this one. But I want you to see the pattern. Is the yellow above the blue? Yes, it is. Okay, so are my signals here? If we notice the signals, are the profit targets getting hit? Well, this one, yes. 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 And this one's about to be hit. So it's a nice, simple. Do you see the nice ranging trend movements? I think we've got to agree. Whilst we are too late at the gate to get into this one, notice the pattern of behavior, notice how successful the trade is. And in fact, if you just look at the 4-hour chart on the New Zealand dollar against the US dollar, and I challenge you to go and have a look at that, you've got to remember you are in trend hunting territory right now. There's nice big trends, trades on 180 phase changes and T-wave, trend wave strategy. The trend waves on 180 phase change, very similar strategies. It's bounce resumption type stuff with just all of the elements lined up with current market conditions. Those trades are working out. They're working out quickly. People who are doing 180 phase changes are opening them in an hour. If they're on the 1-hour chart, whatever kind of types of trades they are, they're normally complete because we've got the vols right now and we've got these nice strong trending movements to hit their profit targets quite quickly. We're going to look at the Kiwi Swiss again. Look at that. I mean, again, it's already run its move. So here we are recording a little bit later today. The moves have really already happened. The reason you've got the volatility in right now, and you can see this is pushing up. This one's now about to hit target. So the one we were in, the Euro, the Euro Kiwi, let's just check that, and that is flying down towards its profit target. So you're seeing them all happen. We just haven't been able to get into them early enough. So this is a case of early bird catches the worm, and in this case, whilst our analysis is good, this position is well on its way to hitting its profit target already, as are the others. So the Kiwi Swiss, you can see there, look, big overextension, very close to hitting profit target. Kiwi dollar, again, the overextension. I can then change my times horizon. So if I go to the daily, see if we've got any major pivots, any 180 phase change pivot movements happening. Got a Euro Sterling one being called. Not of interest to me, that at all. And the same one here. You've got an extension. Now, this is an interesting extension. You can see this 180 phase change on the daily on Sterling Swiss. Each day it's getting called. And you'll see the stop is higher. You'll see, because the bars preceding, which generate, of course, these trading signals, the volatility you can see is steadily picked up on Sterling Swiss. Hence why the target, so the entry, this would be here. The profit target would be here. And of course, the stop would be here. This is a long way off, not nowhere near placing this trade at this time. I mean, you can put it on, but it's a long way to go to get to where you need to be. I mean, it's not one that you're going to intraday trade or take on within the next sort of hour or so. This is on the daily chart. So you can see the 180 phase changes here. We've got one on. The other two are running quickly. Now, why is that? It's 12:45, 12:44, something like that. And what that really means is that you've got this double market effect, if you will. So you've got really 3 trading time horizons in the currency market. You've got the Australian Asian market, you've got here, Europe, Middle East and Africa, and you've got North America. North America joined the party about 45 minutes ago, so certainly you've got a good 66% or a good 2/3 of the trading market in and pushing those vols around. And that's why those 180 phase changes, if I just change my time horizon here to H4, they're really all moving to target very quickly. Look, this one's moved to target. These are moving to target, you can see, and this is moving to target. Now, of course, there's not enough play. You can't get into this trade because it's already gone way past its entry, which means that, look, this has all happened in the last 45 minutes while we've been setting the studio up. Of course, it is a case of early bird catches the worm. So you can see the one we've got on. The others are already well moving. It means if you're in the European session looking for these kind of positions, you want to get them in before midday, because when the US joins, that is going to be game over in terms of getting in early, because the market will have already moved. Well, I hope you found and enjoyed that session and got some valuable tips from it. Now you can see how the strategy scanner has really cut down my trading day from what could have been hours down to a few minutes. I don't really need to spend hours in front of this screen to figure out that those positions have already ran and got moving. If I'd have been sat in front of the screen in the earlier morning session today, I would have gotten to all of those trades. Of course, entering the market mid-market when the US is in, those things are always going to be running. So the point is, I can of course manually go through all of those charts and spend hours looking for the 180 phase changer type setups, but of course I can just let the strategy scanner in Smart Charts do the hard work for me. The strategy scanner is the beating heart of Smart Charts. It's searching the market thousands of times a second to put those opportunities right in front of your face. Now, if you only got perhaps an hour a day to put towards your trading practice, do you really want to spend half of that time just searching through charts one by one, looking for trading opportunities? It certainly makes way more sense to let a computer do the clicky work and you spend time examining and doing market analysis on the opportunities presented to you. I'd say that was a much wiser use of your time. Now, if you click the link in the description below, you're going to get a 7-day free access to Smart Charts. It includes all of the strategies you've seen here in the Trading Den, the tools and the incredible e-learning material that is included in the subscription. There are also pages and pages of resources, including all the technical notes and specifications for the 180 phase changer strategy. I'd highly recommend you grab that free trial whilst you can. And of course, if you like this video, don't forget to hit like. If you found the tips helpful, give us a comment. And if you haven't started subscribing to the channel already, get yourself on that subscription list. And we look forward to seeing you next time in the Trading Den. Hi guys, well welcome to another trading session with me, Greg Secker, your host in the Trading Den. And today I'm going to be looking at some 180 phase changes. I'm also going to show you how to use some of the tools inherent in Smart Charts that aren't available in other trading applications. So today I'm going to focus on a number of different currency pairs, and then I'm going to show you some of the tools you can use just to add more degrees of confidence to your trading plan. Remember, if we just have one kind of element that we focus on without factoring in other instances, other elements that are happening on that trading screen, we very much leave our profitability, our success up to chance. So I'm going to start today by going straight in. If I go top right hand side of the screen where it says no strategy, I'm going to pull up that 180 phase changer trading strategy scanner. I'm going to click the first one, which is the Australian dollar against the Canadian dollar. So you've got two commodity currencies here, both trading against each other. And we can see over the last 10 or 12 days here, that this currency pair has yielded some pretty decent returns or some pretty decent results in terms of the strategies within which it has been calling. So I'm going to kick off here with looking at the Australian dollar against the Canadian dollar. Now, let's go back to my drawing tool. I'm not sure if I've introduced you to this before, but this is the drawing tool inherent within Smart Charts 2. So I click drawing itself and I go to freehand tool. So freehand tool effectively just allows me to show you what I mean by a phase one and a phase 2 movement. So a phase 1 movement is the price movement of that phase moving consistent with the trend. So of course, this would be phase 1. And then we'll have a turning point here, and this will be phase 2. This will be phase 1. This will be phase 2. And if you look at the cyclicity of this trend movement, we're calling the beginning of a phase 1 movement here. Now, to confirm that movement of that phase 1, starting off again, which again would be a downward movement, short, consistent with the trend, remembering we're looking to sell on this position. If I zoom in a little bit, you can see that the spot, or the blue spot which caused the entry, should be 1 pip lower than that previous bar, and that previous bar was consistent in that phase 2 movement. So this phase movement, or this phase 1 movement coming down here, says, should this bar that we are currently looking at, remember this is on the, if you look top right hand, this is the 4-hour chart. If this market breaks below this low here, we would look to take an entry. If I'm not sure what that level is, I can do a number of things. I can put the crosshairs on and measure it myself, or easier still, just hit the red button and then it brings the levels in and it shows me that the sell entry would be at 188.55, the stop loss would be 188.28, and take profit would be 188.29. So that entry there is 1 pip below the low of that previous bar. That would be the sell entry. A few other things to be aware of though, looking at this chart. You'll notice that there is a small red line, which is some hours ahead of trading activity. And that red line indicates there is a news announcement coming out on the Australian dollar. So remembering Smart Charts factors in news announcements. In fact, what Smart Charts does quite cleverly is we take all the major news sources and then we pump it straight into the chart, and we display those news announcements when they're expected and anticipated, and we show them as a red line on the chart so you know what's coming. That means you don't have to leave the application and go elsewhere and try and find what's happening with those relevant currency pairs. The system knows which currency pairs you're trading and what you're looking at. Then it goes out and finds any news that is pertinent to that and then displays it on the chart when that news release is going to be released. So if you want to know what the news release is, what the forecast is, what the actuals are, and really what the significance of it is, you simply click the red dot at the bottom and it says the number 2 if you look at the screen, which means there are in fact 2 news announcements. You'll see that there's obviously 2 spots at the top of that blue box, which indicates 2 announcements coming out at that time. And it says, this of course is the Royal Bank of Australia interest rate decision. Of course it's Australia. The previous was 0.75%. The forecast is 0.75%. The actual, well of course that's to be confirmed when? In the next 16 hours and 45 minutes, and that's important. So this strategy has a time horizon, and it also had, meaning it had time horizon for completion as to when you expect it to hit its target. The question you want to ask yourself is this likely to hit its target within this range? And the answer to that question is yes. We know that it's likely to hit its range, in other words, from where you enter the position to where it stops out either for a loss or, most importantly, to hit its profit target, should happen within the next 2 or 3 bars. That would be within the range of 8 to 12 hours. This news announcement isn't anticipated until 5:30 in the morning, tomorrow my time. If I click the next button across, I can see it's just then the statement. Of course, it's linked to that previous interest rate decision. And so we know that there is a time horizon between where I am here. So if I draw that on the chart, coming back onto drawing and freehand tool, I can say, well, from entering the position here to when the news announcement's coming out, which is here, there is adequate time between those 2 points for this trade to work its way out. So we can know that we'd be entering here when it hits the blue spot. We're looking here to make around 26 pips. You can see that if I look to the left-hand side, it'll detail exactly what my profit target is, what my loss target is, looking to make around £2,000. This trade is good to go. There is a good free fall between this position and here. So there's nothing here which should indicate that the trade would necessarily stop out. It's a perfect movement if you consider you've had phase 2 moving back to phase 1, you've had phase 2 and then it's coming back up, turning around with an entry at phase 1 as it takes the low out of that previous bar. So that position is good to go. Australian dollar against the Canadian dollar, great cyclicity, both being commodity currencies. That's one we'll stick on. Okay, so let's go and have a look at the next one here. Again, we're at 180 phase changer. We're picking this time the Aussie Swiss, next one down in the pair. And again, this beautiful cyclicity, this phase 1 to phase 2, nice broadening of the moving averages. We can see a few things. We can see, first of all, we have got a separation, if you notice, of the moving averages. Now watch this. This is relatively important. There's a separation of the moving averages from, if I take my freehand tool, from here to here. Now, that's not ideal. So if you notice this area here, notice how the moving averages came together. As they did, they broke away, nice run movement, and then we're back into phase 1, back up to phase 2, phase 1, back up to phase 2. Notice the length of the phase 1 cycles are twice the length of the phase 2 cycles. Let me show you that. So we have a nice phase 1 cycle here. That's movement of price with the trend. Notice the length of that cycle. If you look here, if I use the measuring tool here, let me go from where the signal was originally called. This is going back in time. So we're looking at the previous one to give us an understanding of how valid the following one is, which is the one we're looking at trading. So I'm looking back here to phase 1, and I'm saying this is my phase 1 movement. So from here to here. And what we've got is 32 hours in time. So remember, this is a 4-hour chart. So it's 32 hours in length for this phase 1 movement, which is phase 1 movement is the price moving down with the downtrend. Now let's measure the phase 2 movement, which is that counter trend movement back towards the moving averages. So again, I click on my drawings tool, I go to measure, I go price and time range. I'm going to go from here to this bar here. Yeah, and so here we've got, again, so 12 hours, this is 45 pips, it's a third nearly of the movement. It's 3 bars, it's only 12 hours. So we know that our phase 2, which is counter trend, moving back up towards the moving average, is only 12 hours in length as opposed to 32 hours. So a much shorter phase 2. And then let's have a look at what the next phase 1 movement is. If I measure that, again, time and price range, and it's from here all the way down to here. And difficult to read the timing on this because it goes over a weekend, so it's saying 68 hours. So ignore the 68 hours because in time it's 68 hours because it's factoring in a weekend, but most importantly it's 5 bars here. So it's double the length of the previous, which was 3 bars, or nearly double the length of the previous, but some way towards the length of the previous one, which was 8 bars for the phase 1. Then you had a little phase 2, which was 3 bars, and this one is of course phase 1. And then your next phase 2, which is starting here. Let's just measure that quickly. And you'll see this one's much shorter in length. Again, just 3 bars, or 2 bars in fact, 43 pips. And now, so what we've had is this extension, small pullback, smaller movement down, and then we're expecting another potentially smaller movement down. Why do I think potentially smaller movement down? And here's why. Because if you notice the distance between the 2 moving averages, what we're really looking for is a separation of the moving averages, and then when the moving averages pull together, like they've done back here. So they're close, they've pulled away, and then when the moving averages have had a good pullback, and then a strong pullback to those moving averages, where those moving averages pull together tightly, we then expect an explosive move downwards, which is what happened previously. Now we're seeing the ranges starting to tighten up. So they've gone from 8 bars to the phase 1, to 3 bars to the phase 2, to 5 bars to the phase 1, to 2 bars to the phase 2, and now we're looking at entering a new phase 1. The moving averages themselves have widened. So the probability of this one producing a decent run compared to what happened previously is minimized. For that reason, this trade will be left alone. Okay, so let's take a look at some trend wave trading strategies now. I'm going to look at the Kiwi Swissy starting there. Now, I like the look of this position for the sole reason that the cyclicity looks great. Very, very clear, very, very reproducible, very consistent cycle length. Let me show you what I mean by that. Take a look at my drawing tool. If this is where the beginning and this is where the end of the phase 1, phase 2 cycle. So this would be the phase 1 piece. And then from here, this is the phase 2 piece. That is my phase 1, phase 2 cycle. I've got a very similar picture taking place down here, haven't I? So let's just show you what I mean. Again, freehand tool. This is my phase 1, phase 2 cycle. Okay, this is phase 1, turning around to phase 2. And again, a signal calling beginning of phase 1 again. Now, I might ask the question, well, how big is this phase 1, phase 2 cycle? Let's go back to my drawing tool, go to measure, go to time and price range. In fact, let's just do time range. I'm only interested in time range. So here I can see that the time is approximately 19 hours, 19 bars. This is, of course, a 1 hour chart. So I know that. If I go to the same thing here, again, measuring that phase 1 range. So from here to here, again to that spot, very similar, I should imagine. 18 bars, so very similar in time length. Your phase 2, which is the movement back to your moving averages, are very consistent. You can eyeball and see that. You don't need to even draw that in. But the nice thing I like is that when the signal gets triggered, look back here where the signal got originally triggered. I'll just put an arrow on there so you can see. Let's take. When this signal got triggered, the moving averages were close together. Then they separate, of course. Now they pull back together. Then they separate again. Now they've pulled back together. We have an entry now being called. You can see that. Let me just move the chart over now. Notice how I moved the chart on Smart Charts 2 right out of the way because I'm using what's called a grab tool. If you look at the options for how I can change my cursor, I can go from crosshairs to markers to arrow to grab tool. Grab tool literally means I can move the chart anywhere I like. So I'm putting it here. If I hit the sell order setup button, which was glowing red, default risk is 2%. I've got a sell entry here at 162.68 with a take profit at 162.13. It's a 13 pip movement. We've got a stop loss here at 162.40. Nice looking trade, right? We've got very consistent cyclicities. We've got some predictability. You'll notice there's no news ahead, which means there's nothing to really scupper the trade, as we can see. So it's hit the green button, let's get the trade placed. And of course, cross fingers, hope and pray. No, just kidding. We have everything here lined up. We've got good cyclicity. We've got a lovely entry. We have the pip 1 pip below. This nice small bar. Remember, there's a nice bit of indecision here. If you look here, you've got a nice high test bar with the open and close very close together. Indicates indecision in what? Moving upwards. Great. That means if the next bar, this one, breaks lower than that low, you've got a nice entry here, 13 pip movement. Should set itself up for a couple of £1,000 profit. So that's a good trade on. That's Kiwi versus the Swissy. Let's check back in on that trade later on and see how well it does. Okay, so we're going to look at another trend wave strategy here. This time we're going to just drop from currencies and drop into gold. Many currency traders are commodity and currency traders simultaneously. There is, of course, that commodity trading index, which demonstrates the link between movements in currency pairs and commodities. So we're going to look at gold now on the 4-hour chart. And the reason I like to drop into this position is, despite this in PMI manufacturing numbers, it's not a big deal for gold. But what is interesting is that the cyclicity here and the uniformity of the price range movement indicates to us that we could be on for a little rally and if we hit the green button, it'll give us the movements here. So about a 78 pip movement, which would give us about £2,000 profit. It's a buy entry at around 1581 spot 11 with a price target of 1588 spot 99 and a stop loss of 1573 spot 23. Let me just move that back slightly. That just right adjusted. And so we've got an entry here above. Now look, there's a nice low test here, which tests right down to the range. You've then got a very nice small entry bar, which is just breaking above the high of the previous bar. Nice looking trade inside the range of the previous price range activity. So there's not much to inhibit it from going higher. It's a simple one to get on. It's a 78 pip movement. It's one we like the look of. We like the uniformity of this trade. And so it's one I'm entering right now. Okay, so we've placed some trades now. Let's go back to the trades screen where I can see my pending trades. If I click on the pending tab, these are my pending trades. We'll revisit these in a few hours and see how well they're getting on. So if you like this video, don't forget to hit like. If you haven't subscribed to the channel already, make sure you get yourself on the subscription list. You'll be able to see all the new videos as we post on this channel. Until then, I look forward to seeing you on the next video. Well, good morning, everybody. Welcome to October the 12th. Today, you are joining me, Greg Secker, your host here in the Trading Den. Lots going on out there, as we well know. Lots of mixed signals as well. So I want to kind of highlight that to you this morning. It's getting a bit desperate around here, as we all know. The second wave is, by and large, turning out to be worse than we anticipated. So the crunch is starting to be felt across the Eurozone, particularly here in the UK. And as we know, markets are responding. So I'm going to jump straight into smart charts with you guys right now and show you what I mean by that. So let's go to my daily chart, which is where I sort of start my morning assessment. And this is the beginning of the week. This is the week of 12th October. We are Monday morning. We're about 11 o'clock in the morning. So just starting out at this time, as you can see on my charts here. Remember, Smart Charts time is always 2 hours ahead of what current time is. That's because it's based on European server time, which is where the rate provider is located. So that's why if you ever wonder on Smart Charts, why does it look like it's 2 hours ahead? It's just because that's where the rates are coming from. That's mainland Europe. Okay, so we start with FTSE 100. A couple of interesting signals I want you to be aware of. Now, look. I've said to you many times when I trade this breakfast breakout strategy, and this is always where I start my week off, and this is because if there is a run there, I like to see if I can get on it. However, today I don't like this because the range says if it breaks through the top of the range, there's a run there. You can see it kind of had an attempt this morning straight off the bat. Didn't quite reach its profit target, as you can see. It kind of went all the way through. It's come back into the range again. And it's now going to try and make another attempt here. Would I be taking that trade? The answer to the question is no. And the reason for the answer of the question being no is all I need to really do is just look at my bigger picture and see if I can make an understanding as to what's happening. Well, my bigger picture says, look, you've got this nice downtrend here. You're just kind of breaking above the 50 period. But look, ostensibly, should I say, we are in this phase one, phase two cycle downtrending. So there's a lot of downward pressure on the FTSE 100 at the moment. It's a real gamble play just to try and grab a few points with such a mixed signal. We're really looking at when you're in a downtrend. If you just focus on this for a second, we're going, this is phase one, this is phase two, this is phase one. That means going with the trend being the downtrend. This is phase two, this is phase one. We always want to trade in phase one. Phase one is where the price action is consistent with the overall trend. So phase two is counter trend. Phase one is with trend. Phase two up here is counter trend. This is phase one with trend. This is phase two pulling back. And if you look at the chart here, you can see the peaks are in alignment. Probability of re-entering that phase one phase, I think, is very high. We only need a little break below this low here, and then we're off to the races again. So I don't like trying to grab a few pips. So you can see it nearly got there and failed. You could have got a bit lucky there this morning, but I'm trying not to base my trading on luck alone. Trying to factor in some other elements which give me a bit of a bigger picture. So looking at different time frames of reference is always very important. And so that's going to be an important consideration as we go into what is going to be a mixed set of weeks in this autumnal run. Sometimes you get nice clear direction, other times you don't. This point in time, FTSE 100, there's no trade on today for me on my account because I don't like the look of the impending picture of doom, which is that price seems to be hovering on that 50, well underneath the 200 in a pretty seismic downtrend as it is, trying to sort of capture maybe 20 or 30 pips on the upside. And if you look at what a breakfast breakout does, it says, look, it measures this distance and says, look, I can buy above that range and grab it. You've got too much prevailing headwind, is my opinion for myself, looking at that daily chart, which really is the chart of all truth. It tells you exactly where people are setting themselves up. So because of the conflict between those two signals, not loving that, and therefore moving away from it. I'm going to jump to Aussie, give you a little look at Aussie and see if you can spot what I spot here on the Aussie. But let's just open up that daily chart nice and clean. I wonder if you notice a very clear chart pattern here. And if you don't, I'll see if I can kind of identify it for you. So let's do a bit of drawing and see if we can do a bit of freehand. If you notice this and this and this and this, that's important because this double bottom is really the price action you're seeing on the daily chart. It's quite a clear signal here, and it's quite a strong signal. Why is it strong? Because the price is through the 50, which is above the 200. There's a really strong, very simple to understand. If you don't know the basic principles of price patterns, really what a double bottom is it's saying that the low here of the, if you look at this like a W, the low here is considerably higher than the previous one, which means that, you know, the retracements are getting shorter, which therefore indicates bullish upside, doesn't it? And the trade for the Aussie would generally be when it breaks through the top of this kind of centerpiece. That's generally the way it rides, or that's generally the way the pattern is interpreted and how the pattern's traded. So we'd be looking for an entry above that target at the top here. So you kind of, if I can kind of draw that in for you, give you a bit of an understanding of where the thinking is. So normally like the entry would be around, let's just move this down here, back here. I'm actually going to hold the command key, is it the command or on a Mac it's the control key, and put a green line across there. So that shows me where my entry would potentially be. My upside potential, well, you know, again, reward risk, just notice that your risk is underneath, if you want to be clever about this, which I always do try and promote, is to put your stop somewhere underneath the 50, consistent with the bottom of that peak here, or that trough, if that makes sense, that higher trough of the double bottom. So again, I'm going to optionally color that in just to make it really clear. This time I'm going to make the line blue. There's no real rhyme or reason to the choice of my coloring other than the green would indicate long or buying, if that would make sense. And then really the target, well, you know, looking at the chart, where has this met most resistance? Well, it's kind of along this price point here, isn't it? If you look at just historically and historically recently, remember these really historic highs and low points, if they've been hit a number of times, yes, they obviously increase in their validity, they increase in their responsiveness, and they increase in their, you know, practicality. But the further in time you go back, the less valid they are. So more recent pricing data has to be factored in at a higher rate than previous pricing data. So if there's this level of resistance that Aussie's met here, which is, if you ever want to know the numbers, just jump to your crosshairs, stick your crosshair across, and you'll see it's 73.41 level. So you'd be considering that would be your target. You wouldn't try and go above that because it may well pull back from that. So we'd be putting that in here. Call that your target price. I'll leave it in whatever light blue color that is. So you can kind of see you've got a pretty much a one-to-one. That's a trade on that I quite like the look of for the following reasons. Positive price pattern. Been to this territory before. Good double bottom pricing movement setup. So good price pattern. I do like to play with naked price on its own rather than have loads of indicators telling me lots of things. But the 50 and the 200 here are perfectly consistent. We've had the pullback, the break through the 50, the break again clearly through the 50 now. Nice strong close through the 50 on Friday. Today's off a little bit, not by much, but a little bit. To take out the high, or to take out the opening price, which was equivalent to the high of Friday, would be and could be an entry signal. It would be something I would certainly consider. And then this upside potential here, if you want to measure that, if you don't know how many pips that is, remember there is a measuring tool built into smart charts that you can use. Just simply take, I could do price and time. I just need price on this particular occasion. We are looking at a price range of, yeah, like you see here, 106 pips. So about 106 pips upside potential. What we got down here, about 129, something like that. So maybe a bit, maybe it's a 1-to-1, 108, there or thereabouts. It might be a little bit more risk than the upside, but it's approximately 1-to-1. And I wouldn't get too finicky about the odd 10 points here or there when you're trading on a daily chart, because a daily chart, as you know, ranges around a lot more than 10 pips. If you're not clear of how much intraday volatility there is on the Aussie, and a good place to understand, where do I put my stop? Do I put my stop close to the price? Because if I do, probability of getting pinged out is quite high. Do I want my stop a long way from price? Well, if I do that, then I'm taking on, I guess, a lot more pips of risk, a lot more intrinsic risk, as it's called. So where do I put my stop is a great question to ask. And let me show you the way to answer that question. We go into our indicators. We type in ATR, which stands for the average true range. The average true range indicator 10 is the default how I like to have this indicator set up, which means it looks at the average true range of price over the last 10 periods. Now, given we're looking here at the daily chart, the period in question, of course, is the daily chart. And then all I need to do is hold my mouse over that, and it'll give me an indication of how much this is moving around. If I look across there, I can see it's 64 pips. So range is around 64 points. Back earlier in the month, back end of September, should I say, sort of 30th September, is ranging 75 pips. And over here, back in early September, 74 seems to be about the peak range, doesn't it? 75, 65, 75 pips. So okay, so if we're saying that our stop loss here is at least 100 pips away, consistent with this pattern, is it outside of the ATR range? Yeah, it is. It's not within the ATR range. You really wouldn't be wanting to put your stop loss inside whatever this ATR range is here, because obviously you're then too close to current price activity. If it's saying, look, this market is moving around a variance of about 65 pips. If you're putting your stop in there, you know, at 30 pips away, let's say you use that as an arbitrary number, which I know some of you do that, and it's a little bit mad because it's not really factoring in the playpen you're in. The playpen you're in right now is the daily chart on Aussie. It's swinging around 65 pips. One would prudently want to put one's stop loss at least outside of the 65 pips. You're putting in there at 30 pips and your trade is on there for the day or even longer. Probability of getting stopped out, have to consider, would be very high. So it's a really useful indicator, the ATR 10, just to show you where things are, how much is the boat moving around, and make sure I get my stop loss outside of that, but then consistent with a sensible place on the chart. So I've done 3 things here I want you to notice in terms of stop loss placement. Number one, I've looked at the price itself, just pure price action. Where is this thing finding a bit of support? Well, we know it's on that 71.05 level round here. We did the blue line to indicate that. Then we said, okay, what else could protect that stop loss from getting hit? Well, this 50 period moving average should do a good job of that, or at least should certainly help. We know that price tends to bounce off and it can crash through like it did before. But we know that if we've got it under the 50, we've got it under this double bottom chart pattern, effectively what that is. And the third part, we've looked at the ATR 10 and we've gone, well, okay, this market's swinging around 65 pips at the moment. It's, 63. We're way outside of that. We've got a 100 pips stop from where we would enter. Seems to be quite sensible. There's nothing really that prevents this market from hitting these numbers. Of course, anything can happen, as we know. It's all a big, big mysterious wherewithal after you press the button, of course. But At least if you do the right job of setting the game up correctly, which if you can see, my focus is always on risk, isn't it? I'm always focusing on what can I do to ensure that I aren't putting too much risk on the table, that I can put my stop loss in a place where it's somewhat protected, try and get as many things on top of my stop loss as possible. A 50 period moving average will do, making sure I'm outside the ATR 10 range will do, and make sure I then use some clever software like a smart charts, which will then trade size that position. So I must know that if I'm going to place this trade, and let's just pretend I was going to place this trade, I press the let's go mad button, but that's only because it's just trying to throw these on the chart. You have to sort of reorganize your screen a little bit. So I just stick my stop loss on the blue line, right? I stick my buy entry, let's say, on the green line, put my take profit, hold on, up on this line here. So I've kind of drawn it in first to kind of give you an understanding of, excuse me, let's put that properly. Okay, so I've got my take profit on the same line. Notice I've just lined those lines up. So that's 117 pips. I've got my stop loss at about 113 pips. We're in a buy entry. We can see is at 7. Sometimes if you can't see it because there's price throughout it, just look over here at the ticket to make sure. That's why it's always a good idea whenever you move any of these flags, it will move any of these ticket items so you can see in very clear print, 72.23 is the entry. Don't worry about the last digit. 72.23 would be the entry with a stop, which is at 71.10, and a target profit of 73.35. So, it's 1-to-1, and that's how I like to do it. I draw it on first with lines, make sure I'm happy with the idea. I've also drawn in the double bottom. It reminds me, I can leave all that on the chart. Smart charts will remember where that is. And that kind of indicates to me and tells me everything I need to know. So I can give this a tag. Tags are quite helpful. So I can say, this is a double bottom, with ATR to remind myself that I've used the ATR to make this decision. I've also left the price range in here. So I've kind of done all my analysis on it. I've set it up, I've put it in, and now when I press the go button, whenever I then look back at this trade, I've got all the details around it just to remind me. It's quite helpful tagging trade. Just remind yourself of why you did things. I think that's a really important thing that most traders forget to do, which is journalize what they're doing. If you don't write it down, you don't journalize, you don't give yourself reminders, then if things go wrong or if things go well, it doesn't really matter which way, there's no learning to be had because your brain can't remember what the reason behind the trade. So always trying to remind yourself of the decision you made, and then whatever the resulting outcome is, the two things that can link that is a tag. So make sure you do at least tag your trades whenever you're placing them, or just try and keep good notes as to what you're doing. So if I hit that, then I hit confirm, and that's in. Doesn't mean it's triggered. It's triggered when the buy entry price would be hit. Okay, so that's my idea on Aussie. I want to jump across to dollar yen next. Show you what I see on dollar yen. Probably comes as no great surprise. It's a continuing trend from what I discovered last week. So let's just jump into that. If you can see, very much again downtrend. Look. You've got the 50 below the 200. You've got the dollar yen has pulled away back in July. Then it's that's phase one with the trend going down with the trend. Phase two back up the trend. Phase one and so on and so on. You see in September, mid-September, about a month ago now, we had that pullback away from the 50. It's now pulled right back up to the 50. And it's given us what's called a confirmed entry signal. So what is a confirmed entry signal? Well, lucky for you, I'm going to tell you. So a confirmed entry signal is, I'm going to turn my hand actually into a grab so I could just manipulate this on the screen and make it nice and big so you can see it. That's my outcome. Now, what is a confirmed entry signal? Okay, we're in a downtrend. I've just zoomed in. We can tell we're in a downtrend because look, there's the 200 period moving average above. There's the 50 below. I'm zooming in on this because I want you to see how traders make decisions on daily charts about entry, exit, and of course risk management. So this would be here. Let's just draw on this chart so you can really see it. Where's my drawing? There it is, right in front of me, saying drawing. Okay, so here's my this is my phase 1, right? These are these red lines here. It's phase 1. This here, also I'll go back to drawing again. This is then, so that's phase 1. This is phase 2, all the way back up to here. So phase 1 is with the trend. It's a downtrend and price is moving down. That's when we would sell. Actually, this would be when we would sell here. Let's see if you can spot what I'm going to be showing you the other side of the chart here in a sec. You'll see the entry or the confirmed entry. So notice, just a quick reminder for those of you that use candles, you can use candles if you want, use anything, but I want to demonstrate this. That's what candles looks like. I want to demonstrate this with OHLC bars. That stands for open, high, low, close bars. Why do I want to focus on them? Because I just think it's easy for you as a beginner or an intermediate, whatever you are, to understand these and see these quite simply. So you've got 4 elements. You've got the high of the bar, you've got the low of the bar, you've got the opening handle, which is on the left, which is the open, and then the closing handle is on the right. So if you take, for example, this particular day here, which was the 14th of September, you'll notice that price opens at 106.09. It goes up to a high of 106.15. It drops to a low of 105.53, and it closes, that's that right-handed handle there, at 105.70. So we can see it's a down day, isn't it? There's more sellers in this period of time on this particular day, which was the 14th of September, opened, went up a little bit, and then just nosedived throughout the rest of the day, and then closed lower than where it opened, which meant it would be conditionally painted red, which it is, as a seller bar. And that happened continue all throughout this phase 1. Remember, phase 1 is with the trend. Whether that's long or short doesn't matter. Phase 1 is with the trend. Obviously, the trend here is down. So phase 1 movement moving down is exactly that. Phase 2 is this counter trend movement. And then we're up against the 50, and we've seen this pattern all along on dollar yen. And let me show you what a confirmed entry is. That confirmed entry, if you were to go short, if I was to go short, if anyone was to go short on this particular trade, let me tell you where traders, how they make their decisions. Well, the decision for technical traders is this. You've had the phase 2 movement indicated by more green bars than red. You will have some red in there, but they're mostly going to be green. Otherwise, the thing could never get up there. So that's your phase 2. Now, you've got the first red bar is coming, and this is what we call this is a reversal bar, meaning it's reversing from phase 2 back into a new phase 1 is the plan here. Let's have a little. So the anticipation here, of course, is now this. Wow, that's a slightly weird looking line. I don't know how I've managed to do that. Let's delete that. It's slightly weird. I must have grabbed a slightly free. Okay, hold on. Drawing and freehand. Okay. So yeah, what I'm looking for is this. That's a straight, funny looking line. Anyway, that's a weird one. I'll have to talk to the tech team about how I've managed to do that. I think you get the idea. Crazy looking line. But there's your phase 1, here's your phase 2, and then this is what we're anticipating for phase 1. I'm going to delete that line so we can focus on the bar behind it, which is this one. So notice this is the confirmed entry bar, if you will. Let me show you what I mean by that. You've got the close on Friday at 105.59, and that's where things open today. But the actual low was 105.58, 56. And today opened, rallied up a bit to 75. If you want to see what actually happened on dollar yen, what the actual, play of the day was, of today, should I say, you can see it here. All right, this is exactly as I just told you. So now we're looking at it on a 5-minute chart, same thing. But each of the bars are now not a day, they're 5 minutes in length. You can see exactly what happened this morning. And this would be 8 o'clock this morning. Remember, 2 hours ahead is what Smart Charts is on in terms of time. So you'll see that at 8 o'clock this morning, we had this little rally, as you saw on the daily chart, and now it's coming off. And where it came off and hit around here, which was 105, I think we said 56, it had to break through. When did that happen? Well, that happened, well, it was down there already in the morning, but it went up and then crossed back down through at about 10:30 this morning, which means that where is your confirmed entry then? Well, the confirmed entry is when the first reversal bar, this is called the first reversal bar, when the low, not the close, but the low of that first reversal bar is taken out. What do I mean by taken out? Meaning, let me just kind of move this over so you can, I've tried to sort of make this as big as possible so you can get the picture. 1 second. So this low takes this, see where this blue line is here? It's right on that closing handle, and it will move up and down as price moves up and down. But when the bottom of that was taken out, which was Friday's low, was taken out, that would be what we call in the game a confirmed entry signal. That's your confirmed entry signal. So how would you trade that? Well, quite simply, let me show you. You would have a stop would be here at 106.10. So you'd have it a little bit wider, 106.13, something like that. Not much wider because you've got the 50 again. Don't forget, it's your protection. So let's draw this one up exactly the same way we did as the previous one. I'm going to come in here and put some trend lines on. I'm going to put a horizontal line here. I'm going to also put on, just for completeness, average true range. Let's stick that on. What is the average true range at the moment? About 44. It's really gone down recently, but it happens like that. Don't forget. You would expect this kind of accordion kind of seesawing of ATR, because when you first start at the beginning, it gets really going and then it shrinks up and then it gets really going again. So it's kind of, that's that pattern you expect when you leave phase, when you're in phase one, it stretches price down, you have lots of selling, then the ranges start to close up and get smaller. That's indecision with the selling, if that makes sense. So less sellers, ranges get smaller, open and closing prices start to match up, and then it gets going again in the opposite direction. That is completely the dynamic that you'll see millions of times across thousands of markets. That's how buyers and sellers work. Everyone thinks it's a sell until somebody thinks it's cheap, and then they start buying, and then the closes and the opens start to meet each other, area of indecision, and off we go in the opposite direction. That's exactly how that phase one, phase two breathing actually works. So here, using the same lines, we want to make sure we're 46 pips, or what did we say here? Yeah, 44 pips away from the current price. Well, the entry would be at the bottom here. So look, first of all, can I just see by my eyes that my stop would be in a perfectly ideal situation there? Answer to that question is yes, because there's at least 46 pips there. There's way more than that. So from an ATR sort of check, does that make sense? The answer to the question is, of course it does. So that would be a confirmed entry would be there, which is 105.56, if you will. And then, okay, where are we going for in terms of target? Well, prior to that, okay, if you notice, we seem to be getting down, when we have these big sell-offs, we seem to be getting down to this level here, which is consistent with what's happened before. So we would want to run that. So let's draw the line on here. Trend, and we're going to go again horizontal line, and I would want to put that at least here, which gives me a 104.64 level. So you can now see, does this make sense? You know, from a does this make sense from a reward risk standpoint? Yes, it's check. It would be yes, it would be checked in. Actually, I'm going to just line my lines up with this one here. Sell entry would be here. It would actually be on here, but if you wanted to place this, if I wanted to place this trade now, which I will, then my entry has already been passed. So I would have to do sell entry at market, if if you notice. That would like put the trade straight in. You'd have to hit go on that. Make sure the lines have checked up. Yeah, and that would be in. So then that would be moving straight off the bat because you're at market. You've clearly broken the low you can see already that it's running straight into profit. I know it looks like that's only the spread. You've got to remember on this size account, the spread between the buy and the sell is this part here. That's always the difference in price between what you can buy and what you can sell it for. So that would be a setup on the dollar yen. Really like the look of that. Last but not least, sterling's worth looking at this week. Why? Well, because it's just setting up quite a nice price pattern, right? It's nicely above the 50 and the 200. I want to show you this chart just to give you a little bit of an insight. Yeah, so you've broken out of this like 129.86, 129.80 range that we've been playing with over the last sort of few weeks. It seems to have got through that convincingly on Friday. There's not a big sell-off today, actually. It's just sitting there hovering around this very important level. But, good clear run across here. You've got, again, opportunity to get a nice stop underneath the 50, giving it plenty of protection. Don't forget the ATR 10 period setting to give you an understanding of where the stop should be placed. And then there's good potential upside here. I mean, this is quite a nice looking, this is not a double bottom sort of arrangement at all. This is just a trending down double bottom with the bottoms would be in a different configuration, as you're probably aware from my Aussie example. But there's good upside potential here. Stop below here. Small level of risk for decent upside potential. Leaving the UK alone with the mixed signal, liking the Aussie trade, like the dollar yen trade. And I'm now going to spend my time measuring up the sterling trade and getting that on as well. I hope you're having a great start to your week out there. If you have any comments or questions on this video today, please do put them in the comments in the comments section. I'll look forward to me or my team or respond to them. Sometimes I do get on there. They're the funny responses, generally mine, because I'm probably in a pub or probably at a restaurant or something on the phone. So you might get various different types of responses to me based on where I am and what I'm doing at the time. But I do promise to try and get in touch with all of you, or at least my team does as well, to support me. So any questions, please do put them in. If you like the video, don't forget to hit like, and if you're not a subscriber already to this ever-growing channel, and by the way, may I just say thank you all very much for tipping me over the 85,000 subscribers last week. That was very exciting. We are trying to get to 100,000 by Christmas. I think we're on track for that. So that's not bad for less than a year. We started doing this channel back in January. You can see we've kind of really taken it on full board, and I give it a day of my time every week and sometimes a little bit more. So appreciate all of you for your support, your kind comments, and egging me on to keep going. And I do really enjoy these Mondays, so I hope you do too. I look forward to seeing you, therefore, next week, same time, same place. See you soon.
Where do I start? So let me tell you a little bit about who I am before we get going. First of all, quick show of hands. How many people are here because they want to dramatically change their financial position? Quick show of hands. How many people are really serious about it? Say yes! Okay, good. Then what I do is the following. I teach people just like you how to make an immediate income trading the currency markets. In my experience, and certainly my opinion, it's the fastest way to get rich. How many people are here because you don't just want to make a decent income, you just quite unashamedly, you want to get rich? Let me hear a yes. Okay, then this is what we do. I'm going to give you a quick brief intro into who I am and what I do. I run an organization here, as Scott said, in London. We run a large trading floor in London, and we teach people like you how to actively trade the currency markets. And what I've found is the fastest way to do that is not by teaching you everything there is to do with the financial markets, because it's practically impossible. The quickest way to get you successful producing a decent income is to keep it really simple and to get you doing it. And I did it over 15 years ago myself. I was a little IT guy on a trading floor, and I learned from some of the best traders in the world not how to understand the financial markets. That's practically impossible. But by executing on two things: what to do, and most importantly, when to do it. there's a couple of things that happen every day. And if you know what to look for and then how to put it into practice, you too can make a great income doing that. And I've now taught something like close to 100,000 people around the world. I speak on stage all over the world now doing this, and we run a foundation off all the trading results to do exactly that. And we have a trading floor in Sydney, Australia, where we do the same thing. Today, I'm going to talk exclusively about how to trade the foreign exchange markets and produce a decent income. How many people would like to understand how to do it in about 90 minutes? Yes or no? Good. So I'm going to jump into content as quickly as possible. I'm going to tell you something. When I was 27 years old, I left the trading world. I set up a trading screen at home. In fact, I set up 8 trading screens at home. And I started actively trading the currency markets on the European session from 5:45 in the morning to about 11:45. And 2 important things happened. Number 1, I made a lot of money. And number 2, I got pretty fat. In fact, I used to trade from 5:45 to 11. The only exercise I got was from the trading screen to the fridge and back. And then by midday, I'd be down the pub drinking beers with friends and generally hanging out for the rest of the day. And people used to say to me, what did you do for the day? And I said, well, I've just been trading the currency markets. And I said, what did you do? And they'd say, well, I've just been decorating your neighbor's house. And they'd say, how much money did you make today? And I'd say, £25,000. And they'd go, bugger off. And I'd say, well, you better come and have a look. And from there, I used to drag people to my house and trade live with them and show them what could be done. And I've certainly found, since I've been in this industry, showing people how to do the same thing, unless you do it live with people, they don't really believe it's true. And so what I want to do in this session with you is I want to show you some live trades so you can see how it happens, see how much money can be made, and see how a little lad who was 27 years old at the time went on to make an extraordinary amount of money and then went on to set up 2 of the most successful trading floors within the next 6 years. Would you guys be up for that? Yes or no? First thing I learned was, please write this down. You guys got pens and paper? Lots of notes today. The first thing I learned is any training course you do without belief built in is going to be a waste of your time. So my job here today in the next 90 minutes is to build some belief in you that you can make yourselves a fortune trading the currency markets. If I don't do that, I haven't done my job. Does that make sense to everybody? Yes or no? Okay. How many people here, by show of hands, think within the next 3 years you could become a millionaire trading the currency markets? Let me see by show of hands. Okay, so that's most of the room. And that's interesting. You believe you could be a millionaire trading the currency markets. Same question, or slightly different question now. How many of you are actually doing it today? Okay, very few, so maybe 1 or 2% of the room. And the difference between that I discovered was the following. People think that they believe they could be it, but the truth of the matter is they don't truly believe it. And I learned by working in the States a few years ago with a guy called Bob Dilts that actually there's a cycle that's set up and there's a belief cycle that is set up. And it starts like this. Whatever the original belief immediately impacts the amount of action you take. Please write this down. Impacts the leverage of your resources, which then impacts the results. And finally, and most importantly, this feeds back into the original belief. And here's the rub I learned, is that people think they believe in their ability to be successful in something, but that's just really the thought. It's not true belief. And true belief really comes from what's happening around you, what's real. And I realize that most people think they can be successful in say, this area in trading the currency markets, but unless the people around, unless they're in an environment where that's happening, the real belief is not there. And so what I've discovered, the quickest way to get people successful is 2 things. Number 1, don't even try and teach people how to understand the financial markets. It's practically impossible in a short space of time. Show them what to do, show them when to do it. So please write that down. What to do, when to do it. 2 things, quickly. And then the last thing they need to do is they have to see it real. They actually have to see somebody doing it live. They actually need to watch you, so the belief is built in their own experience. You know, what they say is your references, what's around you is what builds your belief. Many people in this room today have family members, friends, brothers, sisters who have all invested in the property markets. That's why we still buy and sell property. But very few of you in this room today will have friends who have made themselves millionaires in the currency market. So whilst you might think you could be successful in the currency markets, the question you've got to ask, are you actually doing it? And the answer to that question for most people is invariably no. And the reason it's no is because they're not in an environment where they're doing it. So there's not a lot of action taking place. the resources leveraged is really your time and your money. How much of it are you really putting into it? And then ultimately, what are the results like? Follow the cycle round. It starts here. Yeah, I think I could be successful doing this. The amount of action, well, I'll go along and maybe read a couple of books, try a couple of different things. The resources leverage my time and my money. Yeah, I'll put a little bit into it. Results, awful. Feedback to the belief, yeah, probably not for me, probably doesn't work. Take an opposite person in a completely different environment. When I was a kid, as an IT guy on a trading floor, 36 people, roughly my age, maybe a few years older, all of them trading successfully the currency market. My belief was it possible? Christ, I was watching guys and girls who were 5 years older than me making what I was making in a year every 5 days. Did that increase my belief of what was possible? Yes or no? Yes. Did it increase the amount of action I took? I took all my money out and threw it into a trading account. Did that increase that? Yes or no? The amount of action I took then impacted the time and the money I put into it. It was everything. The results were extraordinarily surprising. And of course, that fed the belief cycle and it went off in a different direction. So, the challenge is I have to get that across to you in 90 minutes. Can we do it? Yes or no? I think we've got to start by showing you a live trade. Are you up for that? Well, it's actually a Saturday, so the market is closed. But let's show you something I recorded not too long ago to show you what's possible. We will quickly jump to the laptop, because the game here is to build the belief. So, here we are. This is the British pound. Now, currencies are traded in pairs. What are they traded in? Pairs. So very much like you would imagine the stock market, when we buy one currency, we expect one to go up and the other one to fall. So what we're looking at here on the screens, if you look to the left and the right, is this is the British pound against the US dollar. And we're looking to make £19,000 in 4 minutes. Would that be a good return on everyone's time, yes or no? Would £190 in 4 minutes be any good? That's still not bad, but let's look at £19,000 in 4 minutes. I'm going to show you a trade. I'm going to jump, folks, straight into content now. Is everybody okay with that? I want to get right to the nitty-gritty because we've got a little bit of time. And so I'm going to assume the lowest level of knowledge in this space. So some of you may know some of the basic principles. I will get through those quickly, but I want to get you up to speed as quickly as possible because as far as I'm concerned, this is the most exciting, fastest money-making world, the currency markets, that everybody in this room should be involved in. And I want to get you into it quick. The first thing I'm going to show you is a pivot trade. Please write that down, a P-I-V-O-T-S, pivot trades. And it's one of the most powerful things you could do. It takes you between 30 minutes and an hour a day, and it could literally bring you in between £5,000 and £10,000 a week, relatively easy with low risk. Would that be a good idea, everybody? Yes or no? So let's start that game off. We're going to look at a pivot trade, and I'm going to play you a video right now. You're going to hear my voice come over the video, and then I'll explain what's happening.
A pivot breakout now on British pound against the US dollar. Notice how the British pound against the US dollar has ranged throughout this, what we call R.5 to R1. And as British pound now breaks through here, as it's now doing, we're going to take a long position, which means we're going to buy British pound, and we're going to look to run up here. And that means running towards the R2. We're just really going to look to take 20 points. We're going to have a 20-point stop, and we're going to have a 20-point target. So a simple 20-pointer. Let's go place that trade.
Okay, does everybody understand what I'm doing there so far? Yes or no? No, good. So what I'm doing is what you just saw on the screen there was you saw a bunch of lines. Did everyone see a bunch of lines across the screen which looked something like this? And then you saw some lines which looked something like that. And then there was this line in the middle, and there was this little lines going up and down like this. Did everyone see that, yes or no? Now, we noticed that the British pound was starting to break out through here. Well, first of all, what the hell is all these lines about? Well, traders, professional traders around the world use these lines as guidelines as to where currencies move to. This is a market of $4 trillion every single day. How many? $4 trillion. So these markets move around, they're extraordinarily transparent, and they give us very clear signals. If we're going to make money trading, we need very clear signals of which to trade upon. If a currency was to break through one of these lines, us as traders, we want to jump onto those positions, and we want to do it as quickly as possible. And what's happening here is you're seeing the currency break through the line, and that tells us there's an opportunity to buy it. Now, the challenge with this is that people who come to learn the currency markets have often traded the stock markets before. And in trading the currency markets, we know that something happens in the currency markets that doesn't happen in the stock market. What happens in the currency markets is because there are so many millions of traders that are looking at this thing happening, as soon as a currency starts to break out and starts to move upwards, what do you think happens? Exactly, it moves in the opposite direction. For some reason, the currency starts to move backwards. And the beginning, or the novice trader, do you think the novice trader is comfortable with that or freaks out? They freak out. And so in currency trading, please write this down, the most important skill is that of anticipation. Having an understanding of what's likely to happen. Anticipation in currency trading is king. And so when people don't know what they expect to happen, of course, when it does start to move back, they freak out. Now, why does that happen? Well, the reason it happens is in the currency markets, when currencies start to move upwards and they break through these lines, the big traders want to test how strong the move is. So immediately what they do is they sell the move. So they'll sell it up here, and the currency will start to fall. If you know what is likely to happen, you have the anticipation. Of course, that's the mother of all skill here. You know not to freak out, and you know what to do next. Does that make sense, people? Yes or no? If you don't know, likelihood is you'll freak out and do something in reaction. When you act in trading out of reaction, your emotions are involved, and you're always going to do the wrong thing. So we have an anticipation, this pullback, what we call a pullback, is going to happen. Let's walk you through that as the market now moves. So let's go back to the video and take a look at that. So we can see here, if we just jump back to the screens, the British pound here is just breaking through, and I'm anticipating it to move up a bit and then do what? Pull back. Is everybody clear? Okay.
Okay, so it looks like we have cable at about 61.68. We're going to go 1,000 a point.
Okay, so let me just quickly interrupt the video again. It's a long walk on this stage, folks. 61.68 is where I'm buying the British pound, and I'm expecting it to run 20 points. How many points? 20. So I want it to run to 61.88. That's what I'm looking to make. And I'm trading at £1,000 a point. And that means every point it moves, I look to make or lose £1,000. And interestingly, doing it in the United Kingdom, it's completely tax-free. So everything I make or lose, I pay no tax on, which is quite important. Okay, so that's what I'm in. I'm in at 61.68, and I'm looking to get out at 88.
We have a 20-point stop. That's 20,000. And yeah, we'll happily buy that. Good. And we can see here, that's good. So 1,000 a point.
And there I am.
Our average price, our current price here is 161.89 because we're up 1,000, and the trade is moving. Now we're happy to take that 20-point stop. That's about 20,000 risk on a 2 million account. That's 1%. So we're happy with that. We are in the trade. We'll now wait for the position to see if we have some movement, and if we have movement, you'll see it move quite rapidly. So we have a couple of points. We have 3,000, 4,000, 5,000. Expected to pull a little bit back off that level, bounce, and then continue moving. Notice here as I extend out the line here, we've got the trade registered here. Current price 61.70. P&L is 2,000, now 3,000. So this is going to move around. It's the deal price on the trade, as we can certainly see here, was 61.68, and the trade is steadily moving along. And all we're looking really now to do is pull 20 points. Now the way we'll do this trade is on this platform I'll hit close deal in a second, which will then bring up the trade ticket. It's a lumpy trade, 1,000 British pounds a point. So that means that we need to make sure that the brokers are aware that I'm trying to exit the trade. So I'll hit close deal, and it will allow me to bring up the deal ticket. And then I'll literally just hit close, or I'll hit obviously buy to close. Sell to close my lot.
Eek! What's happening? The market's selling it, and at this point, people get freaked out. So I'm now down minus £1,000. What would your novice do at this point? They'd sell. They'd freak out. But anticipation is the mother of skill, and I'm expecting this to happen. So I casually wait and carry on. In fact, interestingly, I've learned something about myself. I video myself trading all the time, and I put that out on the internet. And I've learned that all of us have tells. Do you guys know what a tell is? You can tell, like, physiologically there's something going on in the person because they do something. And I know my nervousness is always and I've followed by a little video, so you can look out for it, even though we're down a bit.
Testing that level, what I was expected to do would be bounce and immediately now start to move back upwards, and that would be my expectation. So again, I'm up a point, 1,000, so not a lot right now, but I expect this bounce, and it's now starting to bounce upwards, so back to 3,000, 4,000, and really now just waiting to close the deal. When we get over the 20-point mark, where I should be able to see about £20,000 of profit, I'm literally going to start to hit the close deal button and pull this trade off the table. I'd expect the run around now, given that it's broken now, clearly gone through that level. Here we can see it's 12,013. Here we are. We're up to the 21,000 mark. So I now want to exit this trade. So I'll be now moving my mouse. See if it can hold this level. Let's close the deal here now, and see if we can lock that 20 points. So it's holding 22,000. It's not going to move anymore. Let's click the close deal, and let's get this trade priced up. I'm waiting for the broker now to pull my price. So you can see the price has moved around, and here I go, and it's going to hit sell at 20 points is what I'm after, which is around this level here, and we'll take the trade just about here. Let's tick it up to 20. See if we can capture 20. There it is. Okay. Oh, we got 19. Okay, that's close enough. So there we are. That's how you make £19,000 in about 3 or 4 minutes. So there we go. Let's move on and have a look at and see if we can do another one.
Okay, cool. Good trade. Thank you. Okay. It is the asset class of the super rich. It trades something like, please write this down, about $4 trillion a day, so it's very big. What does that really mean to you? Well, the problem with the market, if you're going to, let's say you were to take an hour a day out of your time and devote it to creating an additional income stream, and let's say that additional income stream within a period of 6 to 12 months could contribute another £5,000 to £10,000 a week profit to your bank balance, would that be a good use of time? Yes or no? Yes or no, folks? Now, let's look at the cost of doing that. Well, first of all, you've got to risk measure it up. There are lots of different things you could do. A market that's risky, in my opinion, is the stock market more than the currency markets. And the reason for that is that the stock market closes every night. And when the stock market closes every night, the next day it opens up, it can gap down. The currency market is open 24 hours a day, 5 days a week. It therefore means that because there are so many people trading it and there's so much activity in that market, the signals are better. And the reason the signals are better is because there's more people doing it. It's a more liquid market. Please write this down. The greater the liquidity, the greater the precision, the greater the predictability. This is how you can get people who have never traded the markets before or have traded the markets badly in the past and give them one or two simple systems and have them generating a couple of 100 points, we'll talk about what they are in a second, or pips or points a week, and getting out of their job within 3 to 6 months. Now, you can't do that in other markets, but you can in this. And the reason you can in this is because there's high predictability, and that's critical and important. In my experience, the money that you can grow in this game is phenomenal. You can control £100,000 with £1,000, and because this is so much bigger than any other market, the New York Stock Exchange is a swimming pool, while the currency markets is the equivalent of 7 Atlantic Oceans. So there's high precision here. It's a 24-hour-a-day market. You can trade it whenever you like. Today, with an internet connection, a tax-free broker in the UK, and some simple software, learning 1 or 2 systems, you can start making money not within months, within minutes, and be up and running. In fact, what we do is I take people, we train them up for 2 days. The expectation is not to understand the markets. I always say to people, I do not teach people to trade. It's impossible. But I can show them how to make money from trading. Let me ask you this. Would you rather understand soup to nuts the currency markets and the financial markets, or would you prefer to know what to do and when to do it to produce an income? Which one? The first or the latter? The latter. Now that means that the almanac of trading is really not what I do, but I'm going to give you a bit of an insight as to how it works. Currencies are traded in pairs. That means when one goes up, generally the other one goes down. That means if you think the British pound against the US dollar is going up, you buy pounds and dollars are being sold. Conversely, if you think the British pound is going to go down against the US dollar, people are selling pounds and they're buying dollars with the money. And that's really all that's happening. There's two other things that really push the markets. There's the buying and selling of the currencies. There's also how the traders feel about the marketplace. And that's the old fear and greed that's attached to it. I'm going to play you a video now of this depicted in the stock market. The same thing applies. Check this out.
There are all kinds of technical explanations for stock market crashes. But at root, it's all about herd psychology. In a bull market, that's when share prices are rising, even the smartest investors can succumb to what the former chairman of the American Federal Reserve, Alan Greenspan, famously called irrational exuberance. But when the herd changes direction, sometimes in reaction to nothing more than a change in the wind, their mood can also change from euphoria to gloom. The herd stampedes.
One cow gets scared, and that fear just translates to the whole herd, and they all take off. And the rest of them don't know why they're scared. They just feel that fear, and they run. Fear overwhelms all rational thinking until it's over.
In market jargon, the buyers have turned into sellers, the bulls into bears.
Despite the zoological imagery, the point is that markets are mirrors of the human psyche. Like Homo sapiens, they're prone to mood swings, from greed to fear. They can suffer from depression, and sometimes they can experience complete breakdowns. That happens rather more often than some financial theories would lead you to expect, but not so often that we're ever quite ready for the next breakdown.
Okay, the great message in this is that, please write this down, fear overrides all rational thinking. Now this is critical and essential. Fear overrides all rational thinking. So, how do we use it? Well, write this down. We don't do as we think. The results you have in your life are based on how you feel. How you feel about something defines whether you do it and therefore get the results from it. Most of us think a good game and we play a poor one. In the trading world, it's all driven by how people feel. In the currency markets, if the market feels a certain way, there's going to be an action that happens from that, and there can be a lot of money which can be made. Now, in the currency markets, fear is your best friend. Let me illustrate something. If I can just jump back to the slides very quickly. A bar chart on the currency markets looks like this. This is how we read the currency markets on a daily basis. And you'll notice there are 4 elements to that chart. If I draw them on the pad here, you can see there's an opening price, there's a low of the day, a high of the day, and a close of the day. That's what we see every single day when we look at the markets. However, there's something which happens regularly in the European session here, which is where most good traders can make all of their money long before any of you even go to work. Let me show you how it works. If you imagine yourself looking at a chart, and the bars on the chart are 1 hour in length. So this would be 5 a.m., this could be 6 a.m., and this could be 7 a.m. And let's say this was the euro against the US dollar. Something happens 2 or 3 times a week on European currencies against the US dollar, the euro or the British pound against the US dollar. And those of us who are in the know, that know what to anticipate, can make a decent chunk of change from it. Let me show you how it works. We notice here, first of all, that the British pound, or the euro against the US dollar is moving up. Does everybody agree, yes or no? And this is 5 o'clock in the morning, and most of you are asleep at that time. At 6 o'clock in the morning, again, it's the next bar says, well, the euro's going up, everything's normal. But something happens on the 7 o'clock bar here on the euro at 7 a.m. The market opens, moves upwards, and something happens in Europe early in the morning. And for whatever reason, it shoots up but then it shoots right back down. And it's this that causes the concern. And this is exactly what we're looking for as high professional traders. We're looking for what we call a high test. What are we looking for, folks? High test. That's right. The market has risen up, it's hit high, and then it's fallen right back down. Now, this fear in the marketplace equals a money-making opportunity. And it happens 3 or 4 times a week. And what we do as professional traders is we look to draw a line underneath that, and then we sell the market, hoping this is going to happen. And it happens most of the time. This high test on European currencies happens with regularity. And if we're set up for it, and we know exactly what to do, we can take between 50 and 60 points a week. Sorry, a session every time it happens. So this is 50 to 60 points times 3 days a week. This can give us between 150 and 180 points per week. Now let me monetize that for you. If you're an average beginner, novice type trader trading at £10 a point, you're looking at making 1,500 to 1,800 pounds completely tax-free for about 30 minutes of your time. This is purely a case of knowing what to do and when to do it. The rest of the market, the uninitiated, the people that haven't followed where the professional money is, it's the professional money which is initiating this move. Most novice traders are trying to fight with the professional money and come up with their own ideas. My point is, understand what they do, copy what they do, and then run the same positions that they're doing. All they're doing is they're capitalizing on a profit run they've had in the morning, and then they're turning the market over. That fear freaks out most novice traders. However, if you know that it's happening, you know it's about to set up, and you understand the signal, can practically everybody in this room take advantage of that move, yes or no? And if everybody in this room was to do that same trade every single day for the next 3 years, let's say we built a room this big and we kept doubling the size of the room up, would it affect the currency markets at all? Would that start to not work? And the answer to that question is no, it would keep going. And the reason is because it's such a gigantic marketplace. You try doing that in the stock market, things start to slow down and stop working. That strategy's worked consistently for the last 14 years. Every single day, there's that opportunity that can happen 3 or 4 times a day. To make 150 points, in some cases, when people start out, that's only £1,500 a week. That can quite quickly become £15,000 a week. Is that worth doing for maybe an hour and a half a week? Yes or no? Now, how does it work? Well, take a look at the following slide. If this is the British pound against the US dollar, unlike stocks, we quote to 4 decimal places, and the pips are the 3rd and the 4th decimal place. And so if we were going to buy the British pound at 155.70, and it ran 20 points, and we made 155.90, how many points have we made? We've made 20 points. And if we were trading at, say, £20 a point, we've made how much? We've made 400, exactly right. And that's what we're looking to do consistently. Now, with all of trading, whether it's the currency markets or the stock markets, here's what losers say. Let's identify what your loser trader says. He says, he looks at the screen and he says, how much money can I make? And that's always the wrong thing to say. The winner says, how much money can I afford to lose? That's right. So let's teach you some of the secrets behind this. First of all, what do millionaire traders do? All of them, bar none, keep the risk as low as possible. And the maximum risk we look to take is 1%. What percentage? 1% per trade. So if we have £10,000 in a trading account, the maximum we're prepared to risk is £100 and no more. Let's look at an example of how this works. You'll notice there's a chart up here, and it's the British pound against the US dollar. Notice a few things. As the British pound is ranging, let's draw it up here. As the British pound is ranging here, it hits up against the line that we call resistance. What do we call it? That's right, against resistance. Then it falls, and then finally it jumps through the line, and then it comes back. And that's exactly what that graph was just showing you a minute ago. And as traders, as foreign exchange traders, we are waiting, please write this down, we are waiting for the pullback. That's where the money is, every single time. We don't buy here. We never buy here. We don't do that. That's what your stock traders do. They're buying things which go up and break up through these lines of resistance. We don't do that. We wait for the market to go through, and then carefully, steadily, and considerately, we wait for the market to pull back. In other words, we're waiting for those professional traders to sell the market, and we're waiting for it to come back down here. And as it does, and as it starts to pull back and then bounce, this is where we buy it. And it's an adage of all professional currency traders. We're waiting for the pullback. If the pullback doesn't happen and it runs off to the moon, we leave it. But if it does happen and it pulls back, this is our opportunity to make money. Does that make sense, everybody, so far? Now, the question becomes, how do we keep the risk low? Well, let's jump to the slides very quickly and we'll illustrate it there. Okay, so this is where we would buy. We're looking to buy the market. Notice it jumps through the line of resistance. That line of resistance now becomes a line of support. We would expect that line on the chart to support the price. And invariably it does practically every time. So when the currency comes back and starts to bounce on that line, we would expect to buy around that point, really where the green line is here. Now, of course, we need to know, well, where do we protect ourselves? Where does the stop loss go? Well, the stop loss is our order in the marketplace to kill the trade if things go wrong. Is it conceivable that I could buy that and it could still tank, yes or no? Of course, and at some point I've got to cut the trade out to protect myself. The distance between both of those 2 points is called the risk. And the first job, write this down, step 1, I must measure the risk. So I've got to measure the risk. In this case, the risk is 50 points. Please write that down, 50 points. So this is a working example of how to measure and set up the risk nice and low on every single trade to make sure I get it right. Now, why do we do this? Because we know where gamblers make the biggest mistake in the casino world is they'll go into the blackjack table, they'll start betting, and they keep the risk the same on every single hand. If I start with $100 and I bet $10 on every hand, if I start to lose, has my risk increased if I keep my hand at $10? Yes or no? Of course, because I have a smaller pot. And they don't risk size down. In fact, what gamblers tend to do is they double up on hands, don't they, to try and win their money back, and very quickly they get cleaned off the table. In fact, if you were to film a casino and you were to turn down the volume and then play the video back on double speed, you just watch a bunch of people going into a room, emptying their pockets and walking out again. And that would be a great business to have. In the currency markets, it's exactly the same. If we don't keep the risk low, we're effectively gambling. So we measure how much risk is on the table, and we know it's 50 points. Then what do? Well, we realize that we can't risk more than 1% of our account on any one trade. So if we had a £10,000 account, we can only risk 1%. Okay, so what? Well, now I know I've got £10,000 in my account. I've got 1% risk on the table, so I've got 10,000. I'm going to risk only 1% times by 1%. I know I cannot afford to lose more than £100. That's my maximum risk. So how do I use the information? Well, I'm trying to figure out, let me tell you the question I'm trying to figure out. The question is, how much money should I place on this trade? And the answer to that question is, well, it's my £100 divided by the 50 points of risk that was on the trade. The maximum amount I can afford to place on this trade is only £2 per point. That is it. And by doing that every time, I make sure that if things go wrong, which invariably they can do from time to time, then I don't risk more than 1%. If I'm smart enough to do that, it means two very important things. Number one, if I lose a bit, I lose less and less and less every time. But as I win more and more and more. Does that make sense to everybody? And that's one of the most important messages in trading. If I lose a bit, I lose less and less and less. If I have £10,000 and I move to 9,000, well, now I'm only going to risk £90 per trade. If I have 20,000, now I'm risking a bit more. I'm risking £200 per trade. Does that make sense to everyone? So by doing that, I keep my risk in check, but I allow my account to grow whilst keeping the risk in check at the same time. Okay, good. There's a should list and a must list operating in all of our minds. And the biggest killer to success, this is the National Achievers Congress. And I do this Congress with this organization all over the world. And whether you're in Singapore, Australia, New Zealand, London, or America, it's consistent across society. Comfort is the biggest killer to success. Please write that down. Comfort is the biggest killer to success. Most people, sadly, are comfortable. And so they operate out of a should and a must list. The should list says I should become wealthy, I should travel the world in style, I should buy my dream home and my holiday home as well, and I should be the person I've always wanted to be. That's the should list. The must list says I should pay my bills, go to work, eat and sleep. Which one gets done, left or right? Invariably, it's the right. Why does the must list get done, but the should list doesn't get done? And here's the answer. The must list, if not done immediately, is always followed by pain. There are two driving forces, as Tony was just saying, behind all human thinking, which is the desire to avoid pain and the need to go get pleasure. And the ones on the right, the must list is, hey, if you don't hit those, if you don't eat, if you don't sleep, if you don't go to work or don't pay your bills, you're going to be in pain immediately. If you don't travel the world in style tomorrow, enter the airplane, turn left, or buy your dream home, are you going to be in pain tomorrow? Of course you're not. The only time you really get in pain with the left-hand side is when you meet somebody or see someone you haven't seen for a while that's living in that world. And that reminds you of the things that you promised yourself that you haven't followed through on. Does that make sense? In fact, when I started doing this tour with this organization a few years ago, I met a guy that you're going to have the opportunity to meet at this conference over the next couple of days, and a guy called T. Harv Eker. Anybody met T. Harv before? Quick show? Yeah, you're going to love that guy, yeah. Absolutely amazing. I absolutely love him. And we started touring in Malaysia, and we met each other, and we just got, some people who get on with like a house on fire. And we're flying. We decided to get our seats together in the airplane so we can fly through Singapore and back and down to Australia doing this tour. And we were just chucking ideas around, and I said, it's fantastic. I said, people, they want to get rich, and they talk a good game, but they don't do it. I said, I don't understand it. I said, there's some simple things that need to be done. I said, I was a kid on a trading floor as an IT technician earning £15,000 a year when I first started. I said, I can make that in like 5 minutes now. And he said, yeah, I know. He goes, Greg, the simple truth of the matter is, he goes, people aren't stupid. He goes, it's just that it's not that people are aiming for here in life and missing it. That's not what's going on. He said, people are aiming for here and hitting it. I was like, you're absolutely... And so suddenly a seminar kicks off at like 35,000 feet on a Singaporean airline flight above Malaysia. And there's T. Harv going backwards and forwards with me, and we're talking about it. And I realized very quickly is that people, when you ask them what they want, most people don't know. And by not knowing what they want, they invariably get the stuff they don't want, and that's what's happening all the time. When I do these conferences around the world, I meet thousands of people, and people say to me, I want to be a successful trader, I want to get started, teach me what you learn, teach me what you know, show me how to make money, and I'm going, great, stop. What do you want? And most people, when you ask them that question, what they want, they simply don't know what they want. And so therefore, they haven't put their mind in the space of what they want. Simple rule of success, you'll learn this from Richard Branson, you'll learn this from Tony Robbins, you'll learn this from Robert Kiyosaki, you'll learn from everyone here, is people who are successful know what they want, and they've got an understanding of how to get there, the steps in between. The rest of the world has no idea what they want, and they aren't focused on it on a daily basis. All they're focused on is dealing with problems. They're dealing with you say to them, what do they want? And they'll say to you, I don't want to work for this guy no more. Or I don't want to do this no more. I don't want to be married to him or her no more. But they're focusing on all the things they don't want as opposed to the one or two things that they do. And we found it's impossible to get anybody successful, whether it be trading or investing in anything, unless you can focus them on a goal. So the solution is this. It's goal first, set the meaningful goal, and then break it down into the core components of what needs to be done. And in my experience, certainly my opinion, that works like a charm. If I can't elicit from you what you want, teaching you to trade then becomes kind of pointless. Does everybody understand what I mean by that? Yes or no? So I'd like to walk you through a process that, if I can just jump back to the slides really quickly, what I believe wealth is. In my life, I've made more money in the last 20 years than I could have possibly imagined. Wealth is doing what you want, with whom you want, wherever you want, whenever you want, as much as you want, and as soon as physically possible. Do you guys agree with that? Yes or no? So we have a process called the 4 steps to change, and I want to walk you through it. You guys up for this? This is really very cool. This used to be called the 9 steps of change, and I just realized people couldn't cope with 9 steps, so we had to kind of shrink it down to 4. And we're going to give you an example of how I used this in my life not so long ago, how it yielded some nice results. It has nothing to do with money, actually. It has to do with a completely different area of my life. And I want to share it with you by giving you an example of how I use this to train people to get wealthy first and then use the tools to then go and make a lot of money. If you want to become rich, you've got to sort this out and then a couple of simple tactics or skills. Does that make sense? The two go hand in hand. If you teach somebody how to make money trading, forget it, they'll never do it. They'll give up 2 days later. If you say to them, what do you want? And they say, I want £10,000 a week. And you go, great, why do you want that? And they say, well, because I want to do this, 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 and this, and I want to pay off that and do this and do that. And you went, great. Now let's build the goal around that. Let's break down what needs to be done. How many trades do you need to do? How much money do you need to put in the account? How much time do you need to devote to it? When are those money-making opportunities in the marketplace? Suddenly, like a laser beam, that individual's brain becomes focused on exactly what needs to be done and exactly how to do it. Does that make sense, people? Yes or no? They stop talking about the bullshit. They stop worrying about their wife or their husband or their job or the things they've had enough of in their life, and they start to laser focus. So there's a process, and it's called the 4 steps of change, and I'm going to teach it to you now. You guys up for it, yes or no? There you are. Okay, step number 1. Please write this down. Create a meaningful goal. So I'll tell you a story. The story goes like this. I'm on my trading floor, not too far from here if you jump on the river, down to Chelsea Harbour. Our trading floor is on literally at Chelsea Harbour, and I have all my traders on there, and we have a training centre where we teach people how to do this, and then they go and sit with a trader, and they trade live. And I'm sitting there with a trading team about 3 years ago, and we're looking out across Chelsea Harbour, and opposite my trading floor is Battersea Heliport. Do you guys know where Battersea is? You should know. Battersea Heliport, the little heliport that juts out on the jetty is there, and there's helicopters landing, and one of my traders says to me, Greg, why haven't you got a friggin' helicopter, dude? What's the matter with you? And I said to him, yeah, you're right, I should learn to do that. And at the time, I was playing a lot of polo. I broke my back playing polo last year, so I stopped that as a bad idea. But prior to that, I was playing a lot of polo. I thought, maybe I should get a helicopter. I could fly straight from Battersea out to the fields and be there in like 5 minutes. That's probably a good idea. And so I decided that was a good idea, and I phoned up a friend of mine, and I said, who should I learn from? And he said, there's only one guy you need to phone who's the best at teaching you to do this in the country, and his name's Q. And he's like an old, he looks like an explorer. He's got like a proper moustache. He looks like a brigadier in the old army or something, and he kind of talks like this. And so I picked up the phone, and I called this guy Q, and I said, Q, I'd like you to teach me to fly. And he said, look, I'd love to be able to teach you to fly. He went, hello, Greg. He speaks like that, right? I said, hi, Q. I said, I would love you to teach me to fly. You've come highly recommended off one of my friends. I'd like to get started straight away. I said, I'd like to know what I have to do. He goes, well, Greg, first of all, I'm very busy. Can't teach you for another 6 months. I was like, oh, okay. Well, can you tell me exactly what I need to know in order to become a pilot? And he said, sure. So jump to step 2. Step 2 is plan it with surgical precision. So I'm on the phone, write this down. Step 2 is plan it with surgical precision. What exactly needs to be done in order to get me as a successful pilot? At that point in time, I had absolutely no idea. He's telling me how many hours I've got to give it, what exams I've got to do, what medicals, all the training that's required. And suddenly I realized, okay, I want this is what I've got to do. And I have a very clear picture now of the activities of what need to be done. So we're talking away, and I get really excited. I've written loads of notes like you guys are doing. An hour later, I'm like, great, now I'm excited. I've realized this guy is a complete nut. I want him to train me because he's eccentric, he's mad, he flew a helicopter through the South Pole, he's an absolute lunatic. So I realized if anyone's going to teach me, I need this lunatic to teach me. So I'm excited. I said, would you train me? He says, no. Then I figure out, okay, I've got to make this thing happen. So step 3, write this down, schedule it and lock the door behind you. So I said, well, hold on, I've got to think quick now. I want this guy to train me. But he's not really biting. He's busy. He's got 6 months, of training to do with London Air Ambulance or whatever. So I suddenly want this guy and I can't get him. So I suddenly thought quick and I thought, well, I remember an old phrase which was 90% of your problems can be solved by writing a check. Have you heard that phrase? That's an important phrase. 90% mine, not 100, but about 90% of your problems can be solved by writing a check. Let me test that one out. So I said to him, how much is it going to cost me to do this? He said, well, we just invoice you every month, how much you fly. I go, well, yeah, I understand that. I said, but to, maybe put a deposit down on a helicopter finally and to do all the trading and everything else, what is going to set me back? He says, well, I don't know. He goes, are you coordinated? I said, no, not really. He said, well, about £70,000 or someone like you. I went, £70,000? Are you kidding? He goes, well, I don't know, something like that. So I went, okay, fine. So I said, I'm going to be in Barclays this afternoon. I'm going to wire you the money. It will be in your bank by 5 o'clock this afternoon. He says, Greg, you do that, you start next week. And that's how it happened. So what it means, step 3 is schedule it and lock the door behind you. It means, what do you have to do to ensure that you follow through? Does that make sense? It's not just a case of, most people set the game up so that it's difficult to follow through, easy to back out. Does that make sense? That's why most people never get the stuff they want, because it's difficult to go forward, easy to back out. You've got to set the game up the other way around, where it's easy to go forward, now it's difficult to go back out. Okay, step 4. Step 4 is what? Get around the pathwalkers, get around the people. So not only did I start to learn to fly and do this activity with folks, but I also learned very quickly that the quickest way for me to get successful was to get to the airfield maybe a couple of hours earlier than when my lessons were booked, and spend time with professional pilots who do the same thing. And that's exactly the same process I take with young traders who are looking and wanting to make a decent income from trading. Today, the markets are all about learning what needs to be done and when to do it. A trading strategy, write this down, a trading strategy equals zero discretion. Zero discretion. So in other words, you sitting there going, I wonder what I should do. Should I buy the euro? Should I sell it? Should I wait for the news? Should I front run the news? No. A trading strategy is a tried and tested system that someone else has done all the work on. And all you have to do is implement it at the right time. Does that make sense? Now that requires a little bit of discipline to do what you're supposed to do rather than do what you think. So as your confidence grows, what can happen is you can become overly confident and then start doing the wrong thing. And that's the only bit where you've got to rein yourself in. In my experience and opinion, when you then do that, the results flow. I want to get focused on you guys now and see what you could do. Would you guys be up for that? Yes or no? It's all right, me flying around in a helicopter. Let's get you guys up there and making you some money. It all starts with getting you focused. So I've talked a bit so far about what mechanically you need to do when you're trading. Does that make sense? The problem is, if you never do it, the information is kind of irrelevant. So in order to get you to do it, we have to get you focused on doing what needs to be done and focused on what you want. Is everybody cool with that, yes or no? So I'd like you to write down 3 things that you want that you haven't yet given yourself. Do that now, please. 3 things you want. Monetarily, if you were to have, and some of you would be uncomfortable with the numbers, and I'm okay with that. If you were to have an extra £40,000 a month coming into your bank account, what 3 things would you give yourself that you currently have denied yourself? Listen to the words I'm using, that you have currently denied yourself. Because if your thinking can't allow for an extra £40,000 a month to come into you, is it likely it's going to happen, yes or no? Yes or no? So you've got to expand your thinking past £40,000 a month to start with and accept that. And accept that and say, well, actually, that's okay. I'm probably allowed to have that. Would that be a good thing to do, yes or no? And write down 3 things you would give yourself if that were to happen. The 4th on the list was get around the pathwalkers, get around the people that are doing it. Good note taker. So what 3 things would you give yourself? Write them down very quickly. And what I've noticed is that there are, interestingly, I'm going to bring this up here. Crikey, this is heavy. Right. Now, we are mostly focused on fear when it comes to money. The world is screwed in that way. There is such an unhealthy emotional connection to money in this country. Most people are totally screwed, and they don't realize it. And I want to identify it, and I want to raise it with you. You guys up for that, yes or no? When I was on that flight with Harv Eker, 35,000 feet above Singapore, we had this conversation, and Harv said to me, you know, when I'm on TV, one of the things I say is give me 5 minutes with anyone, and I'll tell you how rich they're going to be for the rest of their life. And I said, that's pretty cool. How do you do that? He goes, well, I'll show you. He goes, it really is asking people a few questions. So we're going to have a little audience participation. I apologize to the people right at the back of the room because it's going to be difficult. But the ones that are up here, are you guys okay to play? And the ones at the back, if you just shout really loud, I'm sure I'll hear. But I want to uncover 2 things. First of all, if I said to you, I want to compare this. If I said to you, money, what does having lots of money mean to you? Okay, so we've got freedom. This is having money. Freedom, yeah, what else? Toys, okay. Security, what else? Sorry? Time, I have time, yes. I did this in Australia, and the guys went, women, And one of the women stood up and went, men. That's Australia, though. Okay, so you have men and women. Yeah, what else? Charity. Wow, yeah, good. Fun. Relaxation. Toys, walking up. Partying, I think somebody said. Okay, now would you all agree that when I said to you, what do you think about when I say having lots of money, or what do you think about when I say having money? Everything that you guys came up with, pretty much, or certainly that I could hear, could be categorized as positive. Yes or no? It is, isn't it? And I said to Harvey, he goes, yeah. I said, well, what's the problem? Most people are, pretty positive associations with money. And he goes, He goes, no, that's what people think they think about money. That ain't how they feel. And I was like, yeah, right, I teach people that. I said, well, people don't do as they think, they do as they feel. He goes, correct. People do as they feel. He said, so you're asking the wrong question. The question you need to ask to uncover how they really feel about money is the following. What do you remember being said to you around the subject of money when you were a child growing up? Money doesn't grow on trees. Look after the pennies, and the pounds will look after. Do you remember that one? Anyone have a parent who said, we can't afford it? Yes or no? Show of hands. Most of the room. Do you know, when you tell a child, we can't afford it, does a child hear, well, at this particular point in time, we must exercise a certain amount of fiscal restraint? No. A child hears, hey, there's a category of people in life who can afford stuff. You ain't in it. And it shuts them down from the get-go. Do you guys believe that's true? I believe that's exactly what the problem is. It's unhealthy. It's like a disease. So money doesn't grow on trees. We can't afford it. What else? Rich people are root of all evil. My writing's good, huh? Rich people are mean. What else? You have to work hard. And so on and so on. This is all pretty positive or negative? It's how everyone feels about money. People have got massive approach avoidance. People don't think they're worth it. People don't think it can come easy. People think if they got it, other people would take advantage of them. It would be a nightmare to manage, and you'd get screwed by the HMRC because your tax planning strategy wouldn't be perfect. In other words, there's such negative a connotation and connection to having a lot of money and money as a principle that most people emotionally are pulled back from having it. The only way through this is, first of all, to identify it. Please write this down. To get over your money hurdle, Harv said to me, the last thing he said to me before we landed, he says, money's like an emotional thermostat. He says, people, they get to a certain amount of money per month, what happens? The air conditioning kicks in and the room cools down. That's how most people are. They earn a certain amount, and then everything kicks in, and they just stop moving forward. They hit a certain level, and unless they can readjust that level, they'll never get to where they want to go. And that's most people in society. It has zero to do with intelligence, has everything to do with their emotional capacity for money. Does that make sense? So money, interestingly, is more of an emotional sport than it ever is an intellectual sport. If it was an intellectual sport, we'd all be billionaires. But it's an emotional sport. So the two things one's got to do is, first of all, figure out what you want. Key. I cannot help you if you don't know what you want. And then use a simple, proven way of going to get it. Does that make sense to everybody? Yes or no? So step one is set the goal. Step two is figure out what exactly has to be done to get the goal. If we could just jump back to the slides, please. 3, 2, 1, slides. There you go. Yay. So let's say you want to make £10,000 a month. What do we need to do in order to get there? Minimum target, please write this down, would be 100 points a week. Minimum. 8-year-old children can do this, learning the right strategy. In fact, we have a foundation now where we run a project called the Knowledge to Action Youth Leadership Summit. We take 150 kids a year, and we fly in some of the best motivational speakers, people like Tony Robbins, some of the best that there are in the world, who train these kids and give them the tools and strategies to be leaders, to be emotionally strong, to understand how to look after their health and also to look after their money. And what I do on the last day, on the Friday, is I teach kids between 14 and 17 years old one trading strategy they can learn in an hour and a half, in 90 minutes. And what they then do is they execute that trading strategy when their parents come to pick them up, and they show they can make money yet the parents can't, because the parents don't know the strategy. And it's brilliant for two reasons. One, it shows the kids you don't need to be old to get rich. And two, it teaches the parents you're old and you ain't rich. to teach them the power of knowing a strategy. Useful tool, but you learn that really quickly when you do it. So we need to understand what needs to be done, minimum 100 points a week, and then we need to be coached on what we need to do, and obviously when we need to do it. Now, how do I teach people to trade? This is really key and important. If I was going to teach you to bake a cake, the way people traditionally learn to trade is a nightmare. They go off and figure out how the flour was ground, which cow gave the milk, you know, which chicken pooped out the egg and where the butter was. Is this important if you're making a cake, yes or no? Unimportant. What's important? Understand how to put the game together. When people try and learn how to trade the currency markets, they think they need to learn everything. Huge mistake. You can never know enough. You can never, ever know enough. Just learn what needs to be done and when it needs to happen, and forget about having to own and learn and understand everything. And that's where the money is. You follow a recipe, you'll get the same results as the person who put it together to a point. You just muck around with the ingredients, and you get a poop cake, which looks like that. It's not just about a recipe. Number one, it's the recipe. Number two is you've got to figure out how the recipe's put together and what the person thinks about when they do it. And that, in my opinion, is where you need to be coached live. So perhaps someone like this. In the United Kingdom, we've been extraordinarily successful with doing that with people. And the reason that we've been so successful is that we've kept the game very simple. I could teach any of you in this room how to start producing a minimum of 100 to 200 points a week within about 90 minutes. Completely. Most of you who are smart and have used computers and know what you're doing, you could be up and running in 30 minutes if you just do what needs to be done and then get the job done. I've had amazing success. In fact, we're the largest trader coaching company now in Europe. We have another trading floor in Sydney, Australia. We've had amazing success with it because people like you have come along, they've learned what to do, and they start producing money. It's a simple formula if you keep it simple. And of course, now we run a large foundation where we contribute to it. So what are the steps? Let's have a look. There are 3 steps. Please write this down. Number 1, we've got to train you in immersion. There's no point in learning this over time. Learn it quickly. What's the best way to make money? Answer? Fast. People are like, well, it takes a long time to make money. Bullshit. Do it quickly. It's the best and the most efficient way of doing it. Learn it fast. Do immersion trainings. That's why we train you in immersion. I take 2 days and we train you, give you the skills. Then we give you strategies, and I teach you exactly what needs to be done and when to do it. Normally I teach 1 or 2 strategies at our programs because I'd rather people be focused on the strategy so they go straight out the next week and start producing money. And then thirdly, you put some money into a trading account and we start trading with you live. So you start making money live. That means we pal you up with a trader and you guys trade together, start making money. What does that look like? Well, to start with, here in London, which is our oldest trader coaching school, the one we've run the longest for 9 years now, we have a dedicated training center, which is literally 5 miles from here. And we sit you in a classroom of 50 people. And we train live with you for 2 days so you understand what to do. Secondly, we then coach you live, which then means that you've not just set up your trading account, but you know exactly what to do, when to do it, and you trade live. You watch the trader trade live. That person sits with you one-on-one, and you do it together. And when you see the money being made live, it builds the belief in you, as we said at the beginning, that you can do it too. In fact, most of the people I train these days sit there and they bring a trading account and they trade live with the trader and they make like maybe £1,000 in their first trading session. That visceral experience of doing it live and watching you make the money live means one of 2 things. Number 1, your body and your heart believes it because it's doing it. Does that make sense to everybody? The mind believes what the eye sees, generally. And secondly, it means that you're now emotionally connected to it. The likelihood of you continuing is a lot stronger. When people tell me they've gone off to a vocational course learning about financial markets, the simple question I ask is, did you do it? Did you press the button? Did you do it? That's the only point, that's the only question worth asking. If you didn't do it, the likelihood is you won't. Does that make sense, everybody? So that's critical and important, and you'll do live trader coaching. Now, we're all different. All of us have a different way of thinking and a different way of feeling. All of us, we don't know this right now, but the person sitting next to you might be a different type of trader to you. And I've discovered after teaching people like you for the last nearly 10 years that people learn in different ways. And success in this game comes from identifying what strategy works best with you. And so when I set this program up, we used to sell trading strategies. And so for this conference, I said, why don't we put them all together and just give them to people so they can learn how to use them? Let me walk you through it. I run 3 strategies. Please write these down. They're the most powerful currency strategies known to man right now. There's something called the sniper trade. Please write that down, the sniper trade. And it's an intraday strategy. I'm going to walk to you and show you exactly how it works. It doesn't take long to learn. It'll take you about half an hour to learn it seriously. And it will take you about half an hour to maybe an hour a day to implement. And I'll show you what kind of results you can get from it. There's another strategy called an income generator. This is an end-of-day trading strategy, meaning you put the trade on in the morning, you leave it for 2 or 3 days, and then you collect the results at the end. You aren't sat there watching the screen. Now, some of you will have the internal personality where you will resonate. Do you guys understand what I mean when I say resonate? In other words, you will find that you immediately get on well with or resonate well with a certain style of trading. Some of you like to trade for an hour quite actively, make your money, close everything down. Others of you like to put a trade in the market for 2 or 3 days, have it run, and then take the money out of the market. One of you is more of an intraday style of trader, and one of you is more of an end-of-day style of trader. Right now, we don't know which of you are which, but you are all either one or both of those things. And so we use what's called a discovery phase to figure out where you're going to make the most amount of money possible. What I've certainly learned is this. Every single human being in this room today could do at least 300 points a week. Guaranteed, no trouble. Anyone can do it. Anyone can do 300 points a week. I have people that do over 1,000 points a week. You should maybe set your goals there, but at least 300 points a week anyone could do. Once you've identified which strategy works best with you, and then you put the process in place of making it happen. So let's walk you through how it works. First of all, the sniper trade. Let me tell you how that works. First of all, you'll see on the right-hand side of the screen there, you're looking at a bunch of different time zones. And what we found is that there are 4 time zones that matter in the money markets. Write this down. 4 time zones that matter. There's the daily chart, there's the 4-hour, there's the 1 hour, and there's the 5-minute. There are 4 different time zones. What's important about those 4 different time zones? Let me tell you what's important about it. Different trading communities operate in each of those time zones. The interbank market, which is 80% of that $4 trillion a day, is looking at the daily chart. The hedge funds and major financial institutions are looking at the 4-hour chart. The proprietary traders, these are the guys that run big prop shop houses that take big positions in the market. They're looking at the 60-minute chart. And everybody else is looking at the 5-minute chart. So what? Here's what. When all those 4 different groups from those different trading communities are making the same decision on the same currency pair in the same direction at the same time, do you think it's likely that currency pair will move in that direction? Yes or no? Yes. And therefore, we need to be aware of it so we can harness it and use it. And in fact, it can flag a signal to us now. So we put the trade on practically in automated fashion and collect the money. So the sniper trade is something I've been teaching people to do for a long time now. It runs 24 hours a day. You can automate this so it does it literally while you're asleep. For a beginner, they can pull about 300 to 500 pounds a day, completely tax-free in London. And we sell it for £2,500. And you can just go off and run that one strategy. So that's called the sniper trade. Other people like to do end-of-day trading. They don't have a lot of time. They're busy, they're working for a living, and they don't want to sit in front of the screen for very long. So literally they want to get on there in the morning, put a trade on, and have that trade run for them. Well, this income generator captures the early move in a dominant trend. This looks at big currency pairs that move in a huge way over 3 to 4 days. And we have sophisticated software now which analyzes and picks up these trading opportunities. This simply is a case of being disciplined enough to be told what to do. And for some of us, that's quite difficult. But it tells us what to do and when to do it. It says, here's the setup. It says, this is the currency. It's now moving upwards. It says, here's a currency. It's been moving down for a few days. And as it moves down for a few days, these are daily bars. This might be Monday, Tuesday, Wednesday. Then suddenly something happens. There's a signal here that happens. There's a multitude of different signals. Like 6 or 7 things have to align. The stars have to align up, if you like, on this. But when they do, a signal is generated. And all we do is we put an order in to buy that currency. And we hold it, and we have a stop loss which protects us right at the pivotal point of where it bounced. And we let it run for 3 or 4 days. How much time do we then need to sit in front of the screen analyzing this? practically zero, nothing. We just let it run. And then every day, the little stop loss in an automated fashion is moved for us. And just by doing this for maybe 45 minutes a day, just checking the trades we've put on, at the end of the week, in today's market, we're looking at having 300 or 400 points. That means as a beginner, you're looking at having like £3,000 to £5,000 a week just running this on its own. And it takes 45 minutes a day to set up. This makes you incredibly time rich, and obviously gives you a fantastic income stream at the same time. So people who often work for a living literally run this strategy. This is your get out of work strategy. This is the one I use to get myself out of the investment banking world to set myself up as a trader at home, because it made me more money than I could possibly make at work doing it from an automated fashion from a screen. Okay. The income generator, again, it's end of day. So write this down. Income generator is end of day. It looks to generate £2,000 to £5,000 a week. We sell it for $2.5 grand. People just go off and they run it. We show them how to implement it, and then they use that full time. The last one is called pivot trading. And this is where if you remember when I first walked on stage today and I showed you how to make £19,000 in 4 minutes, this is the strategy that's used by professional traders. And here's why. It shows you where to get in and where to get out. It shows you where the ceiling of the market is and where the floor of the market is. It takes 15 minutes to set up. It's a little bit more advanced. You might not know this is the one that resonates with you. It might be. We sell it for $2.5 grand, and you look to make £2,000 to £3,000 a week trading this. Again, in the United Kingdom, it is completely tax-free. So, the question I have for you is, do you guys think you can do this, yes or no? Are you sure? When Tony was on stage, you said yes a little bit louder. Do you guys think you can do this? Repeat after me. Yes, I can. Yes, I can. You can do better than that. Yes, I can. The question is, why are you not? And the answer to that question is, you've probably never done it live with a professional trader before. True or false? That's probably true. You might not know the strategies, and you may have some fear of the unknown. My point is, start now.
Well, hello everybody. Welcome back to the Trading Den. I'm your host, Greg Secker, and today is going to be an incredible day. And the reason for that is today we are discussing the 4 stages of trading mastery, how to become an autopilot currency trader, how to use wearable technology to improve your myelination process, which effectively is going to speed you up to mastery, and that is the place every currency trader wants to be. We're going to be discussing that right here, right now. Okay, so as we get into this session, let me give you a bit of a backdrop. There was an incredible guy by the name of Daniel Coyle who wrote this groundbreaking book, and it's called The Talent Code. In his subtitle, he says, "Greatness isn't born, it's grown." And I'm a big believer of that. In other words, when we all talk about Mozart, we all talk about Beethoven, we all talk about these incredible people that have achieved the most incredible achievements in their life compared to the rest of us. But what we fail to recognise, and we always put it down to, well, they've just got good talent. Daniel Coyle argues that talent itself is not born, it is nurtured and it is grown by the process of mastery, which effectively is this. It is the process of myelination. Now, what does that mean? What is the process of mastery and myelination? This is something I really want to get into your mind, and it will give you a 4-step plan to greatness. And I genuinely mean that. I've been training and teaching this for nearly 20 years now, and this is the difference that makes the difference. How do you get a Mozart which can make the most incredible music in his teens? What people don't realise is that Mozart had done over 10,000 hours of training with his father, who was a top-rated piano teacher, long before anybody had even got to 2,000 or 3,000 hours. In other words, he practiced, but he didn't just do good practice, he did perfect practice. And he went eloquently through the 4 stages of mastery at a young age. Tiger Woods was hitting drives off the fairway, off the tee onto the fairway, front and centre, straight onto the green at 4 and 5 years old. So this training happened for these people very early on, and they achieved mastery quickly. Now, there are 4 stages to mastery. And I want you to think of this, and I'm going to give you an analogy to say something else in our world, which of course is driving. Let's just take driving as an analogy. Well, the belief constructs around driving are there already implied and in place for you. And what I mean by that is when you come to the age of 17, 18 years old, learning to drive a car for the first time, you've got lots of social proof that driving is relatively easy. It's a skill that can be learned quite quickly. And although despite the only thing that is stopping you from death is a simple white line in the middle of the road which delineates you from oncoming traffic, we learn the rules, we practice it, and then we get in the game. And of course, the benefit of learning to drive means you get to escape your parents' house at 17 years old and you no longer have to use the taxi of mum and dad. But at the same time, you also give yourself what could be a very scary day. It's also a very liberating day. Trading, you certainly aren't risking your life. You are risking your money, of course. But of course, there isn't the social proof around us. Your grandfather, your father, your mother, your sister, your brother probably are not currency traders or any market traders for that matter. And so there is not the social proof around you to give you that implied belief construct that it's possible. So for many people, they simply can't see themselves doing it because they haven't had that in their world. Let's pretend for a second that you have built the belief and you have surrounded yourself with a peer group of individuals who are succeeding and certainly who are in the category of mastery, an autopilot currency trader. What are those 4 steps? Well, again, back to that analogy of the car. Let's take an 18-year-old driving as someone who's achieved mastery. Well, there are 4 stages to that mastery process. Stage 1 is what we call unconscious incompetence. That's unconscious incompetence. What that means is, in the analogy of driving, it's like being a baby. A baby doesn't know that in 17 or 18 years it will be driving, or he or she will be driving. Baby doesn't even know driving's important, doesn't even know driving's a skill to learn, and has no concept of how incompetent they are vis-a-vis being a successful, disciplined driver. They have no awareness of their gap that exists between them as a young child and of course being a competent driver. So that's what we call unconscious incompetent. I'm not aware of my shortcomings. That's really phase 1. Phase 2 is what we call conscious incompetence. So this of course is the 17-year-old who very much realizes that he's not a proficient driver yet, but he's in a school of tuition and training, he's being coached, he's going through all the processes that he needs to go through in order to close that gap. So he is consciously aware, he's training, but he knows he's incompetent. And many months later, he may be now driving around in stage 3, which is where he's got his P plates, meaning he's just passed his driving test. Everyone's aware that this is a new driver on the road with a P stuck on the back of his car. And he is what we call consciously competent. He can do it, but it's not automatic. He has to think about it. And that's really important because whilst it's not unconsciously competent, which is the highest level, number 4, he is competent, but a lot of his brain power is being used following plans, ensuring that he's, mirror signal maneuver, all of those things we learn, all those little routines and tricks that we learn, he still has to go through in his mind. And then by doing that over a period of months and weeks and years and so on, he gets to stage 4, which is unconscious competent. In other words, he's competent. He doesn't even have to think about it. It becomes autopilot. The routines, the systems, the structures, all is routine, it's embedded. And in fact, it's what Coyle would call, and what many neuroscientists would call, it's in the area of neuroplasticity, which means the ability for the brain to learn new skills quickly, and then of course embed them, which is where things become autopilot. There is a science to this, through what we call myelination. Now, myelin sheaths are these neurons which run through your body. Your whole body is an electrical chemical system which is perfectly and infinitely tuned. But of course, for you to learn a skill, for example, if you're a magician, which I am, or a piano player, which I am, or a helicopter pilot, which I am, all of those 3 things, and a trader, at some point I've had to master those things, which means at a technical level inside the body, you're talking about this little thin sheath of myelin, which is actually a fat substitute, wrapping around each myelin sheath. And the more it wraps around, it goes from kind of like a dial-up modem communication to like hardcore 4G, 5G broadband, where the signal is so much stronger. When the signal is strong, it means the myelin sheath wrapping around those neurons has become thicker, the communication is strong, and then you get to a place where even after half a bottle of champagne at a dinner party, you can still sit down at a piano and rattle out any Elton John song because it literally is programmed within your mind. That is a level of mastery that if you bring to the trading game, you can literally live in a completely different space. So you'll remember I did the Ultimate Trading Plan quest that we did that a couple of weeks back. That quest was all about giving you a 4-step plan to building your trading plan. And that, if you haven't done that quest already, I really suggest you go back and do that quest, because that will give you your 4-step plan. Then how do we take that amazing plan and ensure that we are responding, trading, acting, and being consistent with that plan and not becoming a gambler? And this is the area of mastery. This is about putting that plan and putting your behavior on the correct autopilot path. But yeah, in order to do that, we've got to use some breakthroughs now. So those 4 stages we have to break through, really identify where we are. And as I now go through the 4 stages of mastery, and I'm going to describe it now, not in terms of a driver or a child, but in terms of you as a currency trader, which may be a novice at this time, or you may be somewhat inexperienced. But I'd love you to comment, if you will, in the comments of this video today as I walk you through the 4 stages of mastery. And as I get to the end of this, I'm going to talk to you about some of the latest wearable technology you can use to actually accelerate your learning process. You know, if trading is a skill, which let me tell you that this is a skill, and that can be enhanced and sped up by the use of very clever wearable technology. In fact, there is some very clever brain stimulation wearable technology which accelerates the process of myelination. Now, when I first discovered all of this 2 or 3 years ago, of course, I've tried everything. I mean, I've tried all the latest wearable nootropics, meditation sensors, anything which can give me a cutting edge, anything that can give me, you know, the next level. And by the way, the advancements in this level of neuroscience and neuroplasticity has gone through the roof in literally the last 10 years. So you'll see, as I discuss at the end, some technology you can wear which can actually accelerate you through those 4 stages as quickly as possible. I proved it by learning Your Song by Elton John in less than a week. Fully sat down, no music, learning it, playing by hand, and I can now play that song because I was wearing this very clever technology which accelerated that learning process. That is something that you can add to your armory, to your tool set, because remember, this game is not about making money. This game is about getting you to be the best you can possibly be, and as an output from that, you will make money. But if we can get you disciplined with a really rigid, structured trading plan, and then get you unconsciously competent. In other words, you just do it on autopilot. You follow that plan, you act in accordance with that on autopilot, you are going to be in great shape. Let's discuss what we are trying to really achieve in today's training and talk about these 4 stages of learning. Incorrectly, it's been attributed to Dr. Maslow. Now, Dr. Maslow did the hierarchy of needs. That's really what he became famous for. The 4 stages of mastery and learning was actually discovered by another gentleman in the US whose name I will put on the screen right now because I can't remember it. When it's applied to trading and how we learn every single day, it will help you stick to the plan. Now, learning these 4 stages of mastery or learning will help you increase your awareness from where you are now to really where you want to be by understanding consistency versus intensity to become an autopilot trader. For example, you can't get into shape by going to the gym for 9 hours. It won't work. But if you work out every single day for 30 to 45 minutes, you will absolutely get into shape. Intensity is like going to the dentist. It's fixed in the time we know exactly what we're going to do. But if that's the only thing we do and then rely everything onto our dentist, all of our teeth will eventually at some point fall out. This is the difference between horizontal time and vertical time. Horizontal time says, I do a little bit to get to where I want to go each day. Vertical time says, I haven't done what I needed to do. Now I'm in emergency mode. Now I'm having my stomach stapled because I never went to the gym and I'm now too fat, I can't get in any clothing. Or now I'm having a divorce because the relationship, I never figured out working on it. I never worked on it every day. I just let it get so bad. And now I'm in a place where I have to change everything in vertical time. That's called the emergency plan. That's called the quick fix. And often that puts us in a bad place. So in other words, the intensity itself is not enough. We also know we're supposed to brush our teeth 3 times a day for 2 minutes, and that'll help you maintain a good smile without losing your teeth and get you into a routine. Now, the amount of money made in the Forex markets isn't about time. I think you're probably aware of that now. It's not about time, it's not about energy, and it's not about effort. Spending too much of your time sitting in front of the computer doing analysis paralysis is not going to get you there. This is about consistency and then sticking to your trading plan by doing low effort frequently to produce high impact. And that's really the game we want to be in. So let's have a look at phase one or stage one of learning, which we call unconscious incompetent. This is your novice trader. So this is the initial phase of a novice trader when he's just getting his feet wet in the market. So at this stage, a trader doesn't really know what he doesn't know. And that's an important distinction. That can be liberating because you haven't got too much on your mind, but it's a very dangerous place to be in because the dangers are not obvious to the trader. Trading decisions are pretty much still a gamble. They're not backed by a sophisticated decision-making process. And although the unconscious, incompetent trader will never admit that, in fact, they're going to be the worst because they're the least introspective of the 4 stages, they don't know any better yet. So the characteristics of an unconscious, incompetent trader, and as I say these now, I want you to think, is this me? And if so, mark yourself in the comment underneath this video so we get an understanding of what kind of spread of different types of traders we've got as subscribers on my channel. Because some of you, of course, are going to be in the unconscious incompetence. Some of you are going to be in a different area. And you're going to notice that as we go through the different areas, there are challenges that come up. So a few characteristics of the unconscious incompetent trader. Randomly opening and exiting trades without a defined trading system. That's classic 101. He changes his system on a trade-to-trade basis. So on a trade-to-trade basis, the system's getting tweaked and changed every time. So there's no control to measure against. He or she, I should say he or she, because there are happily an increasing number of lady traders coming into the game. And as we talked about in one of my last videos, they are naturally set as a predisposition to be more effective in this on balance. Sorry, gents. He does not, or she does not apply risk management or position sizing principles. In other words, if you look at the list of losing trades from somebody who is unconsciously incompetent, you'll be aware that the losing trades vary quite wildly. Now, that shouldn't really be the case with somebody that's running a detailed ultimate trading plan, because the ultimate trading plan would say, look, you aren't allowed to take more than 1 or 2% risk per trade, and therefore you would find all the losing trades to be consistent with 1 or 2%. The stage 1 unconscious incompetent trader is not going to be in that place whatsoever. You'll see they lose 5% on one trade, 10% on another, 0.5% on another, and so it's going to be quite varied. There isn't a system in place, which therefore demonstrates that the trader is controlled emotionally. They are making emotional, feeling, gut-based decisions rather than logic, following a plan in a disciplined, masterful type format. I want to delineate that and show you the differences between the two so you can really check in with yourself and ask yourself really honestly where I am in the plan. Because incorrect identification of your position in this process will not result in much benefit for you. In other words, if you don't know where you are in the plan, you don't know what you need to do next to get from maybe stage 1 to stage 2 to stage 3. You've got to figure out which one you are. Honesty is going to be critically important here. You often changes trade direction on the spot and chases price. So I'm long, oh shit, it's going up, now I'm going to go short. Oh, it's short, oh, now I'm going to go long. And we see that happen a lot. Very quickly, someone has a short bias on euro dollar based on nothing. They haven't even bothered to check the higher time frame. Maybe it's above the 200. Suddenly it starts rallying and then they jump on the other side of the trade and try and catch it all the time, paying lots of spread away and getting themselves into a fair old muddle. They get motivated by winning trades and they don't really care much about losses. Beginner's luck is the juice of the day, is what keeps them going. And often one loss, just one, can often wipe out all of the wins on a bunch of previous trades. This is indicative of somebody that's, you know, cutting their winning trades too early and letting their losses run. So at this stage, the traders with beginner's luck are more likely to keep going and make it to the next stage. However, often traders lose money, they get easily discouraged and acknowledge that trading isn't as easy as clicking a mouse. Here it's really important to understand that you are just getting started and that not knowing a lot is totally okay. Your focus should be on learning the basics and trying not to lose too much money. The goal here is to move from stage 1 to stage 2, and stage 1 is always about realization of where you are in the stages. Stage 1 is about bringing to your conscious attention that actually you may not be running to a plan, you may be falling foul of a number of these characteristics of the unconscious incompetent trader, and until that realization set or stage sits in and of course we realize where we are, we can't take the appropriate action to move from stage 1 to stage 2. Now, let's have a look at stage 2. So stage 2 is conscious incompetence. So remember, if you look at the analogy with a child that's driving, this of course is not a baby anymore, not knowing they can't drive, but this is a 17-year-old who realizes, look, there is a gap between my skill set and being a competent driver. I'm trying to fill that gap by undergoing tuition, coaching, instruction with a driving instructor, and I'm consciously working on it. I'm aware I'm incompetent. So at least I have the realization phase in my mind that, yes, there's some work to do here. I've got to fill the gap. This is what we need for you to be able to go through and know which stage you're at, so you know what work to do next. When I've got you with a cracking trading plan, when we accelerate this mastery, you're going to find yourself in a completely different space. If you're somebody who's watching this right now, who's having inconsistent returns or inconsistent results, one day you're doing great, the next day you're not, you're in the unconscious incompetence phase. You don't know what you don't know. And that's a dangerous place to be, because you might think you're more competent than you are. Analysis of this that we've done over the last nearly 18 years now demonstrates that most beginners think they're way higher up the curve than where they really are at. And that's why you often get some seasoned traders who sit there and laugh at beginners and say, you don't know what you're up against yet. Well, you can go into this just foolhardy, relying on a few wins to keep you going, or you can put this structure in place. I highly suggest the latter. So what is stage 2? Well, it's conscious incompetence. We know that there's a gap. It's the stage of consciousness. This stage, should I say, of conscious incompetence is the one that usually lasts the longest. This is the learning, training, coaching, mentoring, threshold, making choices. Some traders will never leave this stage. Please be aware of that. Even after years of being involved in the markets, they spend their time just literally consuming more information. There's a few principles and questions that can make you aware of potential problems in your trading mindset and general approach would really be the following. Have I changed my trading system more than once in the last 6 months without really putting in the work? Basically what we call system hopping, and this should really be avoided. So system hopping is, I haven't really played full out. My trading plan might suggest I trade 15 to 20 positions a week. On average, I'm doing 5 or 6, haven't really thrashed the system out, haven't really embedded or trained it through, and now I'm hopping onto another system. Probability of mastery with that approach is practically 0. Am I actively reviewing my trades to find out what is going wrong? Or do I try new things all the time without dedicating myself? Am I still making impulsive trading mistakes that cost a lot of money? Or do I follow my trading rules? Do I repeat the same trading mistakes again and again? And in order for me to know that, I've got to look at what I've done in the past. I've got to introspect. I've got to go back, look at my losing trades, and do I spot a pattern? Lying to yourself will keep you trapped in the current phase and your current state, and you won't be able to improve nor evolve as a trader. So that's your stage 2. So let's now jump into stage 3, and stage 3 is the analogy with driving was of course a young man or girl having passed their driving test, and they're now 17 years old, but they've got bloody great P plates stuck on the back of their car telling everybody on the road that they are a new driver and to be treated with some caution. Well, that conscious competence says, I'm a proficient trader, I can do it, but I have to think about it. And that thinking about it is going to burn my neural activity. In other words, it's going to tire me out. This is where you constantly have to think, mirrors signal maneuver when you're in a car, or clutch in first, and then I select the gear, and oh my God, I've grinded the gears again. Well, over time, it just becomes an automated, myelinated, as Daniel Coyle put it, code that becomes encoded into your nervous system, meaning you don't have to use up too much conscious capacity to keep on path. The trader now starts to realize what trading is all about. Although trading is still not easy and the results are far from being perfect, he understands the importance, and this is key, the importance of process-orientated thinking. He stops focusing on only the outcome of his trades. Now, most traders want consistent results before they apply consistent actions, which therefore is impossible. First, you need a consistent approach, a solid routine without much deviation, and then you will have consistent results as a byproduct of that. Of course, those results won't be too impressive at first and you'll probably keep losing for a while, but at least you have something you can work with. As I said in previous videos, you've got a control. When your actions and results are all over the place, it's impossible to identify specific things and work on them. You've got no control. So it's critically important that we have a trading plan in place first, see previous quests for that, and then we implement this process of self-mastery. Self-mastery means I'm putting routines and practices in place which ensure I move from unconscious incompetence through conscious incompetence to where we are now in this example, which is conscious competence. I know what I've got to do, but I have to think about it. To then finally, which is the place we all want to end up, which is becoming number 4, stage 4. Few people get there, which is unconscious competence. This is autopilot trader. This is mastery. This is heavy myelination. So at this stage, the trader has spent years of looking at screens, taking the same setups, hundreds or thousands of times. He knows exactly how his preferred setup looks like, and then trading becomes effectively a waiting game. He's not pushing himself emotionally into a position. At this stage, the trader has fully internalized that he can't win on every trade, and more importantly, he doesn't care about losses as long as he follows his rules. In fact, his rule set, as we learned through the trading plan work that we did, his rule set has changed from I'm a success if I make money to I am a success if I follow my plan. And then if my plan doesn't yield money, then of course I make changes to the plan. So trading is now an activity of pattern recognition, risk management, and constant self-improvement. Now, the unconscious competent trader has a thirst for self-improvement and consistently and constantly studies the market and his past trades. He evaluates the effectiveness of his method. His trading journal is now the most solid foundation of his money-making business. It is his daily routine, and he can turn to it whenever the markets throw a curveball at him. He has a strong and sensible, rooted in science-based control. And so these 4 stages of mastery are critically important. I thought I'd share something with you. How do we accelerate that? How, if we can identify, and by the way, please put in the comments right now which one you find yourself in. How can we improve that? Well, I thought I'd bring in some of the technology I've been using over the last few months. This is called the Halo Sport 2. There we go, Halo Sport 2. And you'll notice, now you might think, what the hell is this thing? Well, this has got a piece of technology in it, like a neoprene series of spikes with an electrode. You wet this in water. It's got a sponge on the inside, so it absorbs that water. It then goes in here, and then you put this on your head, like so, and then you control it with an app. And effectively, what this does is it puts your brain into what we call a neuroplastic state, which means the brain is open to sculpting, learning, and trying new neural pathways which it hasn't gone down before. The pathways that you are going down right now when you think are based on the routes that you have carved and are most consistent to going down. If you're used to your spouse, whenever they give you feedback, internalizing in your head, she's being negative or he's being negative, then you'll always look at what they're saying to you, the predisposition that they're being negative, and you'll interpret it that way. If you then had a coach, counselor, or therapist say to you, well, hold on a sec, what about if that person, when they're communicating to you in that way, really is saying that from a place of love? They'll really struggle to understand how that could have come from a positive place when they're so hell-bent and used to, so conditioned to going through and looking at everything through maybe a negative set of eyes. Now, what this technology does, and which is beautiful about it, is it does 2 things. It puts you into a neuroplastic state, about 20 minutes of what we call priming or neuropriming, setting the mind up for a routine. So I did this, I'm a magician in the Magic Circle in the UK. My family have all been magicians and so on. So I as a part of me, which I love, and it's all about the concept or the constructs of, for me, changing people's beliefs. Right, and if you can change people's belief using magic, then you can do some amazing instructions. My kids love it, and it's always been something that's been part of our family. I wanted to learn a magic routine, and I wanted to see if I could accelerate it. I used this, and boom, I got through that routine and learned a whole set of routines, which would normally take me hours to process and then integrate into me quickly. This integrates it. So I have no affiliation with this company. If you want to get yourself one of these, you just have to buy it from them direct. But it's called a Halo 2 Sport. You need to wet this. You need to prime for 20 minutes. It's a trippy experience, I'll tell you that. And then you go into a process, like for example, you'd have your trading plan, and then all you're doing is you're priming every day before you set up your trading day to put your brain into that neuroplastic state, to increase the process of myelination. And you will find you will get to, as long as you're following your plan and doing the right practice, you'll get to stage 4 much faster than you ever would do by going the long road. So I hope that kind of gives you an insight into some of the latest technology. I've got to tell you now, like 10 years ago, we never had any technology like that. There is no excuse now if you're somebody that's committed to this, if you're somebody that really wants to make this your primary income stream, or at least a decent second income stream, or certainly give yourself more money and choice and freedom, with solid trading plans, with this kind of wearable technology, this wearable hack technology, which can certainly accelerate you to a place of mastery where the myelination process is running at 3 to 4 times faster than normal. This can certainly help with the learning process. If there's one skill in life that you want to make sure you've got in your backpack, is accelerated learning capability. Accelerated learning capability. We all live in a world now where the world is changing so much, whether it's learning new trading system styles or progresses, or whether it's new businesses or new ways of being, we've all got to be able to adapt quickly in the world that we're in, be able to learn new skills, be able to learn new technology and implement that. It's all well and good to understand something, but to really know it means you're actually using it and implementing it. And technology like this really does accelerate and help. Every fat person on earth knows that if they ate less and exercised more, they'd be slimmer, but they don't do it. They know it, they understand it, but they don't know it. Knowing it is understanding the principle and implementing it. And if you can get any help, and I am all about finding the edge, you know, how do I find that little edge, not over somebody else, but an edge which just gets me going to where I want to know better and faster. And there is such incredible technology out there available to you today which can help with this process. However, if you don't know where you are in those 4 stages, the probability of getting to where you want to go is reduced. So I want you to be honest right now. I want you to think about where you are, put that in the comments fields. And now you've got really a couple of options. Option 1 is you can go the long, hard way, take what I've taught you here today, have a stab at it yourself, but not really get into the process of writing a trading plan and then getting yourself on the 4 stages of mastery. Those 2 things together are game changers. If you don't go that road, you are in the road of trial and error, which I can tell you is the most expensive way, emotionally, financially, and spiritually, of learning to trade. People think, well, I won't invest my time in doing a trading plan. I won't do any trading processing or coaching. I'll just put some money in the trading account and I'll have a little punt. It is expensive emotionally, spiritually, and financially if you go that road. It's harder work to put a trading plan together. It's harder work to stimulate your brain into a neuroplastic state every day and then get yourself into a process where you're super myelinating and therefore learning these skills at a mastery level. But if you're prepared to do that, the results and the avalanches of abundance in everything comes to you by putting in that hard work. Let's figure out who you are, where you fit in this process. You know, what kind of personality profile and traits as character do you bring to the table? And if you want to know that, which I think is crucial, it's going to be critical and essential to your success. So I want to make the offer to you to have access to one of my coaches completely free of charge. You'll see a link in the description field. Click that, book yourself on, and have a personality profile and figure out, okay, now I know what a trading plan looks like, the ultimate trading plan. You got that on this channel. Now let's understand who are you in this mix, and let's figure out what starting point you are at. So make sure you see that in the description of this video. Click the link to book yourself onto what we call a trader strategy call, where you want to book maybe 30 to 45 minutes with one of my coaching team who will take you through the process to help you identify who you are. Now look, if you like this video, don't forget to hit like. If you aren't a subscriber to my channel already, get yourself on the subscription list. We'd love to have you as part of our family, part of our team. I broadcast at least 2 videos a week and at least a quest now every month. Until next time, look forward to seeing you later here in the trading den. Hi guys, Greg Secker here. Today I'm with top health expert and superhuman Skip Archimedes, bringing you a brand new interview with the experts. Today's session is all about how to completely transform your energy levels, give yourself the body you deserve, take your success through to another level, and give you a simple step-by-step program to completely transform your life. That is going to happen right here, right now. Okay, guys, so listen, today's session, I am super excited. My brother here, Skip Archimedes. Now, Skip and I have been friends for probably a little over 15 years now. We first met when I set up one of my youth leadership summits, which is part of my foundation. Skip came along and we run these amazing seminar productions that last a week long. They're a week-long immersion boot camp for 13, 17-year-old kids, which are in the areas of health, wealth, leadership, entrepreneurship, contribution, and relationships. So effectively, all the important stuff in life that no one bothers to teach you at school in lieu of history, geography, and everything else. So this is one of those amazing programs that my foundation took upon doing over 10 years ago. And that's when we first met. I was watching the content you were delivering to some kids. And meanwhile, I was so busy in all my businesses, I didn't really get to take it on board, as well as what happened to me, I'm going to say less than 6 months ago. So just put this into context, everybody, because this is going to be a transformational session for you. 6 months ago, I was 13 kilos heavier than I am today. You can see that if you look at smart charts, look at any of the training videos, you'll see me with some pretty chubby face, bit jowly, low energy, kind of sweating a little bit, struggling with my energy levels. Just so you know, this interview is on the back of probably 10 hours of filming today, and I think you can see my energy levels are still pretty strong. If this was me 6 months ago, I wouldn't be able to be sat here popping this energy like I have today. And to that, I have to thank to you, my brother. Seriously, thank you so much. And I mean that with wholeheartedness. Skip and I, we have one big thing in common. We want to try and make a transformational difference in the world. And it was kind of interesting. We got together over something completely different. And you said to me, hey, look, I'm in your neighborhood. Why don't I come over and see you? And then you invited me to your Detox Your Life program. I attend the Detox Your Life program. And oh boy, this is the interesting part. As I arrive, I'm like, so what are we doing for 5 days? I mean, Detox Your Life, I'm up first. We're going to take some vitamins. What are we going to do? Some keep fit? Are we going to do some yoga? He goes, well, first of all, we ain't going to eat for 5 days. Ain't going to eat for 5 days. And that was freaking me out, I got to tell you. Having said that, I participated, I did it. And what happened from there on in was nothing short of transformational. And so I kind of wanted to start this session with, and we're going to go through everything that happened to me, but more importantly, how this pertains to your life. People who are watching this, they're tuned into my channel for a few reasons. One, they're sick of the life that everybody has to kind of pigeon trail along with, which is, the life that we're supposed to live. They want to live an extraordinary quality of life. So that means taking control of their health, taking control of their finances, and direct the course of where they want to go. Most of the people that come here are really committed, dedicated individuals that, are taken on trading, which, as we all know, is one of the toughest things in life you can do. And to be able to do that, you need to have superhuman clarity, fitness, discipline, control. A lot of people think it's just sitting behind a screen, pressing numbers. And we all know that that is not which puts you into a peak state, being able to handle your life and be able to take your life to where it wants to go. So I guess my first question for you, and this will be interesting for people watching, is how did you come into this? Because ever since I've known you, you've always been a few years senior than me, but your energy levels have always been like double mine until I kind of started catching up recently. So tell me how it started for you. What was the breakthrough? What was the beginning?
By being challenged. What I've learned is that in our greatest challenges, there are golden nuggets that can become our greatest blessings. So for me, the first time it happened was when I broke my back. I got told I was never going to walk again. And I believed what I was told. And by all these experts say, right, we've seen this injury before. People
how did that happen?
Doing gymnastics. So I was swinging around a high bar, wanted to be the first person in the UK to do the triple back dismount. I let go of the bar a millisecond too late, came back, bam, landed straight on the bar.
Wow.
Taken to hospital and broken back. And they said, that's it, game over. And I believed that. I went into a pit of depression. I didn't want to speak to people. I didn't know what was the point in this game of life. I didn't know what my part in it was. I didn't understand how people could be happy. I was someone who was born with so many illnesses, like covered from head to toe with eczema, chronic asthma, allergies to dust, to pollen, to animals, to grass, to feathers. Always was on some type of antibiotics. So for me, that was just normal. When I had this experience of breaking my back and believing that I was never going to walk again, Mum comes in and says, look, I don't think it's game over. I found someone who broke his back and he came back fitter and stronger than before. And I was like, who? And she goes, Bruce Lee. I'm like, oh, for God's sake, Mum, he's a movie star. It's not real. Just get out and let me rot. And she's like, no, I'm not going to give up on you. And this is the beautiful thing about having a loving mum, They're just going to love you unconditionally. And that's one of the things that I learned, that this power of love is not some namby-pamby BS. It's where our energy comes from. Like if you try and think your way through life, your brain has been programmed by a society that's broken. It's been programmed by systems that are broken. It's been programmed by systems that if they can put you in fear or they can control you emotionally, guess what? You ain't connecting to your inner power. So I started to follow Bruce Lee's teachings, and I said, look, bring me anything you can on Bruce Lee. And I started to understand his philosophy in fueling up the body, the mind, and the spirit. And when you get all three fueled up, and all three are connected, but the challenge is most people are connecting it in these low energy fields, in these low vibrational fields. And in that place, guess what? That's where humanity lives. That's why we're now being told 90% of most people on the planet have negative thoughts. This is crazy. Yeah. This is not like...
Do you know something that's so interesting you say that. So when I went through this process, I remember you saying to me, we don't age because we get old. We age because we fill ourselves up with toxins.
Toxic,
yeah, we get toxins. Yeah. And so I remember thinking about that, thinking, okay, so I like the idea of that, because if I'm then really detoxified, and I'm not talking about like alcohol or stuff or drugs or things like that, which most people consider to be toxins. Toxins are things like sugar. You know, toxins are things like,
that's
you know,
the biggest one.
You know, it really is. And carbohydrates and sugary drinks, all these sorts of things. And I thought, well, if you know, this gave me hope, because I know I can't reverse my years, but I can definitely reverse toxicity by just cutting out.
Well, let me just stop you there. You can, I know we're talking about trading here, but you can reverse your years, because basically inside your DNA, at the end of your DNA, you've got these things called telomeres. Right. And they're kind of like the plastic bits on the end of your shoelaces. And when you use them again and again and again, what's going to happen? The plastic bits, and you can't use them.
Right.
What happens is all the information goes into these telomeres and it transfers from one cell to a new cell. So in a year from now, most of the cells in your body, the brand new cells, which means what? You're regenerating all the time. The challenge is most people are regenerating into a lesser version of themselves. And that's where aging comes in. That's where the aches and pains come in. That's where we start to feel lethargic, or we have a low immune system. So if there's viruses going around, they get inside the body.
And that's back to those negative thoughts. That's where it comes from.
It's negative lifestyle. Thoughts are a big part of it.
Yeah, because I noticed that. When people start talking about vibration, everyone's getting a bit woo-woo, but you know, it's a really elegant way of describing it. Yeah. I found myself being
vibrating
lighter. Feeling lighter. And I found that normally things that would just piss me off just didn't piss me off.
Exactly, because now you're in this high vibe. When you start to become the observer and you can see things from a higher perspective, guess what? You don't get swallowed up in the story.
Yeah, you do.
Most people are living out their story, and their stories are negative, and their stories create pain. And then what do? They go and tell that to somebody else, and somebody else, and somebody else. And guess what? They're living in this bubble, which is a BS illusion that they've created. And what's the BS stand for? Belief system.
That's right.
Stupid belief systems. Yes. So we've got to understand how we're programmed. And if you want to be a successful trader, you have to get emotional mastery. Because if you let your emotions dictate what you're going to think and what action you're going to take, guess what? You'll become an emotional trader, and you know that there's a system to trading. And if you have a big win and your ego gets involved and you're, oh my God, I found the hack. No.
Yeah, it's so funny. It's so funny you should say that, because I noticed that not just trading I've kind of managed to grind in kind of a routine now over the many years, but you know, by adopting this lifestyle. So, you know, for those of you listening here, we're going to go through the transformational changes I went through, but it really meant setting up a system. Yeah. Because I lost, I think, 6 kilos in the course of that 5-day program. And then over the next...
And healthily.
But really healthily.
Yeah, there's because you can go on like these keto diets where they're saying get all this weight, and they lose the weight, but they're creating so much acid inside, they're literally rotting and rusting from the inside out.
Yes, this is the interesting point. So toxicity levels were disappearing, but being replaced by alkaline.
Well, remember your injury.
This is so funny. So I turned up to the program, and I'm wearing what's called a Mazzalo cuff. I have to say Mazzalo cuff like that because it's because I was Googling it, because I had tendonitis in my not tennis elbow, but the other side is golfer's elbow, which is exactly what I had on the inside here, which meant that when I was lifting weights, it was just, and I was like, am I too old? I'm like, am I too old? I'm in my early 40s. What the hell is it? Am I too old? There's people in their 70s are lifting. What's going on with me? Yeah. So anyway, I got this Mazzalo cuff, which kind of puts your arm in traction. So it gives the tendon time to heal. Because if you look at what's going on, the tendon, it's got little cracks in it when you've got tendonitis. Every time you lift the weight, it's like, because then it's ripping again. Yeah. So you said to me, you said, within the course of the 5 days, that's not going to hurt no more. I was like, well, okay, Skip. I mean, I'll see how this thing goes. And true to form, by day 4, I was lifting up weights.
Yeah.
Because here's what I realized is that when you're constantly stuffing your mush with food all the time, and you've got food in your sausage pipe, if you want to call it like that, because that's effectively what our intestines are, your body's constantly working on digesting, as opposed to your body doing the other job it's supposed to do,
Which is the housekeeping.
which is healing and housekeeping.
Yeah.
And one thing's, to get better, I've got to keep eating. No, to get better, you've got to let your body do what it needs to do without preoccupying it with just constantly consuming and processing food. When you're constantly consuming and processing food all the time, you're actually tired from an electrical energy
For sure.
point of view.
Absolutely.
So I found my thoughts became more positive. I found that my vibrational kind of vibe was different, and I found that it 2 other things. It was attracting people to me of a different orientation.
Let me explain it in a different way. So you're a walking receiver. Just like how you have an antenna, and that can receive a radio station, and if you don't like the sound that is on the radio station, what do? You turn the frequency into a song or a station that you like. As you start to increase your vibrational frequency, and it basically comes down to the amount of light frequency that you can hold within your field.
Yes.
As you hold more light in your field, guess what? You attract different thoughts. You start receiving different things in life, and you will start attracting things in that similar frequency. That's why people come back with more opportunities just come straight on their radar, and they're going, but I'm not doing anything. And I'm like, because you've done the work. You've shifted your vibrational frequency from feeling numb, from feeling dull, from having thoughts that are just heavy, to all of a sudden waking up to the truth. But in that process of waking up to the truth, we have to let go a lot of crap that we're holding on to. And that can be physical stuff, mental stuff, emotional stuff, sometimes spiritual stuff, financial stuff as well. People have dodgy belief systems around finances. And when you clean this field up, you're left with, I know it sounds a little bit namby-pamby, but you're left with the energy that creates worlds in our universe. That's what starts to breathe through you into your life, because you've experienced it.
Yeah, I've 100% experienced it. And I'm somebody that can produce big results anyway. Yeah. But boy, man, like when you're not being like held down by the stuff you're sticking in your pipe, and when these chemical changes start happening in your body, you go from, and I remember reading a book by a beautiful soul called Ben Angel, a guy in Australia, and he wrote a book called Unstoppable. I love this book so much. I bought like 100 copies and was giving it to my friends. You've got to read this, you've got to read this. Then I came and did your program. I'm like, you're doing this, and you've been doing it for like 20 years. But it was, he came up with these 4 states. He said there's guardian, defender. So guardian is like, like you're just getting through the day. You don't want to see anybody. You're just tired out all the time. You're not your normal exuberant self. You're exhausted by 2 o'clock in the afternoon. You can't wait to get to bed. You can't get up in the mornings. You're heavily reliant on sugar, complex and simple carbohydrates and sugars. It's pretty easy to get you into a negative outlook, and so on and so on and so on. And then Guardian was just a little bit better than that. And then you start, when you do the shifts, and I want to talk to you a bit about the shifts, because I think for those of you listening out here, and hopefully you've got yourself a pad and a pen, so I want you to take some notes from this, because this is a super important session. This is the underbelly of what you have to be as the person in the chair that's driving all this trading activity, or any activity for that matter, whatever it is in your life you choose to do. You want to make sure that you in the chair are the best you can possibly be. And what that means is making sure that your biochemistry is operating at a peak. And I'm not just talking about like, for those of you who haven't done this, you kind of think this is just a bunch of jumped up people who've had too much sugar. It's nothing to do with that. You put your mind into a space from defender, guardian to, and as Ben said in his book, it was then synergist and then catalyst. And then catalyst is the peak state where you've got unstoppable energy. You're attracting things into your life because you've got this positive focus, how you affect and communicate with people, and what happens. After I left you, I normally go and do a tour around the world, and I go and see my traders on the Australian trading floor. I go and see my teams in the Philippines, where we built the village and everything. And when you're not in that great state, you're tired out and you're on carbohydrates and so on, and just you haven't taken care of the machine, it's a tour's a tour. But in the state, after I left you, the tour became something completely different. I ended up being invited to go and speak in a detention center for about 300 or 400 boys. Some of them are in there from armed robbery, some were in there for rape, some were in there for murder. right? And my outcome, my job was to give them a talk to help elevate their lives. So I start my talk off by saying to them, you are not you. You are the state you are in at any given time. That's who you are. Because there's been times in your life where you've said, I can't believe I did that. I can't believe I said that. I'm so ashamed. God, I'm so embarrassed. And there's also been times in your life where you've gone, that was me. That was pretty cool, right? What's the common denominator? Well, it's you. It's still you. But the state you're in defines the action you take based on the thoughts and the beliefs you have. Yeah. And I tell you what, and I said to them, I said, the biggest mistake you can make is by re-identifying yourself based on a temporary behavior. And a temporary behavior, like having a brush with the law and then getting locked up in a detention center, which is effectively is a prison for young men, and then re-identifying yourself, naming your identity as a lawbreaker, as a felon, as a villain, that can change the course of your life forever.
Well, this now comes down to what you're choosing to believe about yourself, about your past, and then that will lead on what do you now believe for the future? Because the most important thing in life is to be able to look forward in an empowered way, knowing that whatever level you're playing life at, there's more that can come. More energy, more happiness, more balance, more creativity, more productivity, more adventures. That's what this stuff should be leading people to do. You don't want to have people sat just behind a computer.
No,
the whole point of this
lifestyle
is so
trader,
so they create financial freedom and then they go on adventures. They start to use this thing because
that's right.
You know, out in Asia, the press labeled me the miracle man, and what I always say is every single human on the planet is the miracle. The challenge is, have they learned how to be in control of this thing that has limitless power? Because if you're not in control of this thing, it's kind of like sticking someone who's never driven in a Formula One racing car. Guess what? They're going to crash and burn. No one gives us an instruction manual. And that's why I've dedicated my life, to running the events and, going around the world, helping people tune in to what's possible. And you're now starting to experience what's possible. And the beautiful thing is you're doing it in mid-40s. And you're going to start to experience more energy than you had in your 20s, but you'll learn how to harness it. And the most important thing is focusing that energy, because what can happen is suddenly we can get this abundance of energy, but it could be a toxic energy. It can spin out of control. It can do damage. So we need to learn how to focus this energy into what's important. What's important for your mind and body? What's important for your loved ones? What's important for your business? And then what's important for your play? Because if you're not playing in life, then you're not connecting to that childlike essence that we naturally have. Some of the stuff that we have to learn is we've got to unlearn some of the stuff that we've learned.
Right.
So if I say to you now, do your kids have an abundance of energy?
Yeah, of course.
Do your children learn faster than most adults?
Yes, absolutely.
Do your children live in the moment more than most adults?
They're in the moment all the time.
Do your children speak the truth more than most adults?
Yeah.
So how come we had it when we're children, but energy doesn't care about age, energy doesn't care about race, energy doesn't care about color, energy's energy. And the space between me and you now, I mean, this is like science now. If I took just one of your cells and we put it in a petri dish, over 99% of what's in that petri dish is going to be space.
Right.
So you're made of mostly space. You look at round here, it's mostly space. Even science can't work out what's in the space. That's where the magic is. We connect to that energy field, and all of those traits that we had naturally when we're children, we take on as adults, and all of a sudden everything changes. And that can just come from an attitude.
Yeah.
Understanding that children are the next generation, but how come we had that energy? How can we have that truth? How can we have that creativity? How can we have that natural ability to go and connect with other kids? But yet as adults, we don't have that. So what's happened? A bunch of BS programming has gone in, and that's why people have forgotten who they are. And
then you couple that with the bad habits. The bad habits that we are. What I like to kind of jump to a little bit is so when I meet people all the time since I left your program, and one of the things I noticed was that we basically starved ourselves for 5 days.
But did you go hungry?
No, I wasn't hungry.
And you passed through the hunger pains how quick?
Within a day or two.
Yeah.
Like
the first 2 days are the hardest.
Yeah, the first 2 days were definitely the hardest. But, so I come up with some tricks. I want to sort of check in with you because I'd like you guys out there to listen to these because these were super helpful for me. First of all, I've told a lot of people about this, right? Because they see Greg Secker at 96 kilos, and you can see me on any of you in Smart Charge, you look at the training videos, I'm like this compared to like, I'm 83 kilos. I was 96. That's 13 kilos. That's a big drop in weight. And I'm telling you, it was from the areas that you don't want to have it, from miniature love handles or it's your gut. You know, women tend to put it on their legs or their butt, whatever. But for me, it was there. And that, I walked in, my kids were like, Dad, like, my son was like, Dad, you look like you're 14, man. You know, like, that was kind of cool.
And that's 5
days.
days.
That was 5 days.
Just 5 days, yeah.
And as I left it, I noticed that some of the people who lived the program, they were like, oh my God, it's like the first supper. They were all at the airport. We were in Alicante, to put this into context. We're in southern Spain. It was beautiful. We were all doing yoga in the mornings. It was a beautiful thing. There was a crazy, eclectic mix of people. We had Tamer Hassan, one of the actor who was in Football Factory and The Business and all these amazing films. So we all got on with him really well. And all sorts of crazy people from all over the world that had flown in for this thing. And I noticed that some of the people they would have their first supper. They got to the airport like nom 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 nom, eating loads of food, right? And I know a lot of those people carried on with this, but I thought to myself, no, I'm not going to do that. I've just gone through 5 days of pretty much not eating very much. What are the tricks and tools I can add to this to take it to the next level? And I know I did this in consultation with you. I want to share this for you guys out there. So the first thing was that I realized that just drinking water on its own, I found really dull. So we were allowed, and I know you were pretty strict on this 5 thing, we were allowed to put a little bit of lemon juice with the water. Tell us first of all why lemon juice and what the effect lemon juice has in with water.
Well, first of all, just let me go one step before that. A lot of traders are using stimulants to get energy, you know, caffeine and, you know, tons of stuff that takes their energy level up. But when that stimulant's burnt out, guess what? They come crashing down.
Yeah.
And what that does is it creates an acidic environment. And if we have acid in the blood, we're literally rusting from the inside out. The organs can't work well. The body can't function well. It affects your mood. It affects your nervous system. Everything about you, when you create an acidic environment, it breeds illness.
Right.
So what we've got to do is we've got to get alkaline.
Yeah.
And just to make it common sense for people, look at Duracell batteries. Why do they last 7 times longer?
They're alkaline.
Because they're alkaline. It's not rocket science.
Right.
So, and what science can now prove is that you create an alkaline environment, disease can't live or manifest in that. The only place you want acid is in your gut, but in your blood, you want alkalinity. So if you wake up and you have some lemon water, you know, I recommend like having lemon water, chlorella straight away, because what you're doing is you're flooding the body immediately with alkalinity.
Let's just slow it. So chlorella, because I know you sell the
superfoods.
They're superfoods.
Yeah.
And they're these little green tablets. So my whole kitchen now is just packed full of this stuff, you know.
Yeah.
And they look like funny little green dudes. They smell kind of funny, but you just like wallop them in.
Well, it's an algae.
That's what it is, yeah. And what it does, it just pulls the toxins out of your body.
Oh, it does so much. I mean, just with chlorella alone, it's the highest form of B12 on the planet. Most people are deficient in B12.
Right.
If you're deficient in certain fuels, the body just can't rebuild itself the way for you to literally perform at peak levels.
Yeah.
So what chlorella does is so many people are layered up with heavy metals now.
Yeah.
So many people are layered up with these toxins and poisons. And what chlorella does as a miracle superfoods is it takes basically the crap from the system, and it gets out without leaching the body of any minerals, without leaching the body of stuff that it needs. It is just genius. It's like it goes in, it knows what to get out, and it alkalizes the system. And it's because most people are starting their day with some type of acid going in. Yeah. They're putting caffeine in, they're putting like some type of cereal in, they'll put something in immediately that creates acid, and that's going to break the body down. So we want to turn that so that you start your day powered up. And lemon water and chlorella, easiest way to start it. It's easy. And you'll get addicted to it.
So that's what I did when I was doing the let's lose 5 kilos quick. I was squeezing lemon juice in the water, and it kind of became a thing where when I'm drinking lemon juice and water, because then after that, after I left you, I went to the 16-8 diet, right? Which was, I don't know if any of you guys remember Hugh Jackman when he was filming the Wolverine series of films, and he got his body really ripped up and looking really amazing. He did this diet, which was in a 24-hour day, 16 hours of fasting, 8 hours of not eating constantly for 8 hours, but that was your window to eat. And it basically works out to, and this is so simple, 8 o'clock at night, you stop eating. Nothing other than water until midday the next day. That's the clean way of doing it. And I've done that ever since I left you back in Alicante. So I don't eat anything until, I mean, I will, my cheat might be, I might have a little coffee with some coconut milk in it. That's my little cheat I might have. But other than that, it's just lemon juice and water. I have a mouthful of chlorella tablets in the morning, knocked down by lemon juice and water. That's my routine. So everybody I meet is like, what's the routine? And I'm just giving them snippets of the routine, but it's enough to make massive transformations. So the CEO of my business in Australia, the CEO of my brokerage firm, Capital Index, they've all lost like mega weight because they've seen me. You can't tell people to do this while you're sitting there all fat. It doesn't work, right? You got to live it and breathe it. So, and it's obvious because your energy levels are different, your focus is different, your enthusiasm is different, you're getting more done. Like everything changes, you're spiraling at a different level. It's a whole different
And you're
thing.
nicer to be around.
And you're nicer to be around. You're nicer to be around.
This
Because when you're like dark, no one wants to be around that, right? It's like, it's, you know.
And your experience of life in that moment is dark and heavy.
Yeah, that's right.
And you're not seeing the truth. You're seeing like that much of this much of life.
That's right.
So when you really understand that health is your greatest wealth, which is what we're talking about here, it has to be the foundation. This denial of the truth, you know, people say ignorance is bliss. And I'm like, you think ignorance is bliss? Ignorance is going to turn around and kick you in the backside. Why? Because what we're now understanding is that they're saying 1 out of every 2 people born now are going to get a cancer. They're now saying 2 out of every 3 people in the modern world are either going to get a cancer, a heart disease, or diabetes.
Yeah.
So what the hell's going on? Everybody is sacrificing this, and they're allowing clever marketing to get in.
Yeah, that's right.
And they're making decisions based on companies that are paying you to eat and drink their stuff. That's creating acid and toxicity within the body.
That's right.
If people don't take responsibility of this, they can end up trading, and guess what? They're not going to be able to enjoy their fortune.
Yeah, exactly.
The whole point of putting this health and energy and vitality, and you talk about
They
being
make bad
superhuman.
decisions as well. They don't get to become successful because
they're not going to be able to think straight.
I
No
mean,
way.
the number one skill in trading we all know is sticking to the plan. I do a training all over the world when I go and meet traders. I go and do workshops. And I'm like, guys, how many of you got a trading plan? Half the room has not got one. Yeah. The reason half the room doesn't have one is they don't want to be told what to do and they don't want to stick to a plan. They want to sort of see if they can wing it. You can't wing it your way to success in this. No. You've got to have a plan. You've got to be disciplined to stick to the plan. And then you've got to have the right mindset, which is built and born on a healthier foundation.
100%.
And then it all fits and it all
Absolutely.
works.
As soon as you're in alignment with yourself, and that means getting the mind in alignment, getting the body in alignment, and allowing this spirit, this energy, this life to breathe through you, and you understand that there are specific strategies or habits or techniques that you do every day, regardless of what's going on in this outside world, all of a sudden you're in a position where you've got so much power, but there's balance with it, that there can be craziness going on outside here, and you become the eye of the storm. Yeah. You become centered, you become balanced, and you can still make decisions that because the shit's going to hit the fan in any industry. You know yourself, trading, it goes up, but then there's a dip. Then it will go up. Right. And if you don't learn how to ride these dips, all of a sudden, the dip, instead of it being a dip, it becomes something that really takes you down.
That's right.
And it's learning how that, life works in waves. And most people love it when they're at the top of the wave, but when they're at the bottom, guess what? They start complaining. They start putting more energy into the problem, and then they become a part of the problem. Yeah. And this is why, it's not 5 days where we stop eating. It's 5 days where we start 7:30 in the morning, and that sometimes we went till 1:30 in the morning, and there's 49 process I'm taking people through. Why? Because if it's just about information going in, there's no transformation.
That's right. What
has to happen is there has to be some type of activation. Only through the activation can you then experience the transformation. It's the only way.
Yeah, exactly. And, so if I could kind of, just for people listening, and maybe there's like a 5-day challenge they could do. I know it's really difficult to do on your own, right? But so this is my routine. I take activated charcoal at night, and that just seems to strip out all the toxins. So the next day, when you go to the loo, you've had activated charcoal the night before, right? Because it's really black, in case you're wondering. But what that does is just strips the toxins out. Then I've got chlorella going in the morning, these chlorella tablets, plus lemon juice and water. Then I'm training in the gym. I've got a beautiful gym underneath my home where my trainer comes in at 7 in the morning, 7 till 8. We have a solid hour, really hit a sweat up. We have a big screen TV down there, jamming out a load of music and making it go a bit wild and a bit crazy, just to get yourself all activated and going. Then trading begins at 8 o'clock when the market's open in the UK. If not, trades are on before in the currency market at 6:30. So I have my window at 6 to 7 to prep. So I'm doing this green alkaline kind of protein powder that you gave me, which makes it look like kind of pond watery stuff. But you get used to the taste of that and it's fine. So I kind of neck that, do that. I might put 3 currency trades on in the morning, like pre 6:30. I might have a dip in the pool for 20 minutes. Then all of this is going on, lemon juice, Corella. I've had the activated charcoal the night before. Now just look at that in context to what I was doing, which might be a bacon sandwich and a coffee. Your average trader's grabbing a bacon sandwich and a coffee, massive amount of toxins, massive amount of carbs and fat and junk and sugar.
And they're eating foods that are draining the body of energy instead of actually allowing the body to recover the way it should.
Yeah, literally. I've done this recording session. I mean, we've been in the studio here all day, filming for The Lifestyle Trader, filming for webinars to help people with this big Smart Charts launch we're doing, filming for the YouTube channel because we film every week in here. I've pretty much had nothing to eat today. I mean, I've been going all day. I trained this morning with my personal trainer, and we had a little bit of lunch, but it was small, maybe a salad, and we're still going.
Yeah.
Now, I wouldn't be doing that 6 months ago. Because I'd be like, I'm done for the day. But guys, look, time's over. It's, it's like...
Because you've got this emotional connection to food, and the thought process is, oh, I need this carb food. I need something. What you need is this thing working well. And the way that we've been brainwashed when it comes to food is so detached from the truth. And what most people are doing is they're just eating their way to a graveyard super, super quick.
Yeah.
So to really understand the truth is where we're going to find the freedom.
Yeah, that's right. So for people listening here, what would you say if you were to give people a 5-step plan of what they could do, even though they're not in the supportive environment of the Detox Your Life program? Because I found that to be, it was a program whereby, you couldn't sit there and just stuff a sausage roll in because everyone would be like, yeah, you'd get called out, right? So, what could you do? What would you advise people to do on their own to demonstrate to themselves? Because what I would like those people watching is to experience this. Because I think if you experience it one time, you won't want to go back to how things were.
Sure.
And for those people that are starting to trading, I can tell you this. If there's one skill I can give you, it's this skill. Because everything I talk about on my channel, like what not to do in trading, what to look out for, how to approach it, how to place trades, all of that, the underbelly of it is this right? Is this right? This head and this mind and body connection. We are one thing. The mind and the body is not two separate things. It's all one thing. Yeah. Most of the self-help or personal development industry has been born on learning strategies and willpower. And I'm like, willpower ain't going to get you nowhere if the engineering hasn't got the energy to do it. Because if you're not in that space whereby, yep, I can do this, knowing what to do and doing it can therefore be two very big things.
And how do you know what to do? You have to sacrifice personal will, and it sounds a bit woo-wooey, but then you've got to connect to divine will. We're not alone in this game, but we're so cut off from the truth that we have to understand, right, now I've got to deprogram this. Now I've got to defrag this. I've got to detox this thing. So the first thing I'd say is...
So of the 5, you're going to have 5 right now.
Well, the first thing I want to say is click the link that you're going to put in there because there's going to be 4 online masterclasses that I want to give lots and lots of content. So this is a short little video, so I'm going to give you 5 tips. But if they click that link and they go through to these masterclass events, they're going to get 4 online trainings where I can really go into detail to feed them what they need to feed.
Great.
So number 1, what's the first thing people do when they stress?
Eat.
No, they cut off their air supply.
Oh, they stop breathing.
So they stop breathing.
That's true, yeah.
Now, people think, oh, I'm getting my energy from food. No, you get your energy from oxygen. This is why I give people the experience, because some people know when they come to my advanced trainings they're not going to eat. Some people don't. We just had an event in Singapore and I didn't tell anyone. And we had about 40 people there. And when I told them, I said, guys, please don't have breakfast this morning. When you come, we're going to have a big surprise for you at the event. And people are like, where's the food? Where's the food? And I went, here's the surprise. We're not eating for 3 days. And people freaked. But we had about 6 people there who had influenza 1, you know, that virus that's killing people. It was gone within 2 days. We had people healing injuries. We had people, because the body can do its housekeeping. So the number 1 thing we've got to do is breathe. It sounds namby-pamby, but it's going to be one of the most powerful things you do, because if you stress, where are you breathing? Are you breathing deep in the diaphragm? You look at how a baby breathes. A baby knows how to breathe correctly. You'll never see a baby doing short, shallow breaths, ever.
Yeah.
It's got to be down here. So the first thing you have to do, and most people can't stop focusing on the problem, give yourself a minute and just go and breathe deeply. Bung something on that's going to stimulate a nice song. You know, go out.
But most of us don't breathe properly, right? We're trying to breathe in the top part of our lungs as opposed to breathing through our gut. And all of the alveoli, all of the oxygen exchange alveoli, the 80% of it's in the base of the lungs, not the top.
How do you fill up a glass? It fills up from the bottom going up.
That's right.
So it's the same with the lungs. And most people are only using about 20% of their lung capacity.
Right.
What's the number one cancer now that nobody's talking about? Lung cancer. You use it or lose it. If you're not using your lungs correctly, guess what? They'll shut down.
Right.
You know, this is why when you exercise, why are you bunging the music on? Why are you putting that screen on? Why are you pumping it out? Because it makes you feel freaking awesome.
Yeah.
And when you feel freaking awesome, you make better decisions. Because now you're connecting to a love frequency instead of a fear frequency. Most people are making decisions from fear. Any decision you make from that frequency is going to screw your life up, guaranteed. Yeah. So number one thing, you've got to breathe correctly. Number two, what are you mostly made of?
Water, I guess.
Most people are drinking liquids. They're not even drinking water. And not only that, most people are drinking water that's dead. Most people are drinking water that's acidic. If you're buying water that's in a bottle, water, like your human system, it was created to move.
Yeah.
Any time that you buy water from the bottle, there's no active hydrogen in it. There's no life left in it. Right. It's dead and acidic. Right. So make sure you find a good water supply. Third thing is...
So on that point, just for everyone out there, I have a machine in my house which produces alkaline water.
Yeah.
I know you have other machines in your house, which is called a Kangen machine, which produces alkaline water, but that you said earlier on is microclustered, right?
Absolutely. You've got to have... You want water that's got active hydrogen in it. Why? That makes it alive. H2O. Most people hasn't got the H bit in it anymore. It's just the 2O. So you need the active hydrogen. You also need alkalinity to help the body become alkaline. And then you need it to be microclustered, which means it's tiny water which can get in and hydrate the cells properly. Right. This whole protein myth, which is going around, you can lose 50% of your protein. I mean, I cut your protein out and look what happened in 5 days. No protein going in, but yet we tend to wake up. So there's protein in everything, but you lose 50% of your protein, no problem. You lose 50% of your glucose, no problem. You lose 10% of your water, you are critical. So water and hydration, your brain's mostly water. If you want to be able to think straight, you've got to be hydrating with water every single day, not liquids. Right. Third thing is nutrients. The food that we now buy is drained of all the nutritional value. There's none of the minerals in it because the minerals aren't in the soils anymore. So you've got to get superfoods in your diet. It's key. These superfoods can contain 200, 300, 400% more nutritional value than most foods. With our superfoods, with our synergistic blend, you take one scoop of just one big tablespoon of our superfoods. There's more nutritional value in that one scoop than what most people eat in a week. Right. So we talked at the beginning of this, becoming superhuman, becoming supercharged. Right. The only way you can do it is making sure that you bring superfoods into your lifestyle every single day. So they're the first top 3 things, and I do them under Live Now. Live Now, why? Because you're going to learn how to live now in the present moment. That's all you get in this game of life. If you want to live in the past, the chances are you're going to beat yourself up. You want to live in a disempowering future, again, you're going to beat yourself up. You live in the now, and you connect to your body, your mind, your spirit to its fullest, you're going to start to think different. You're going to start to act different. You're going to start to communicate different. You're going to start to connect different to what most people experience in their adult life. And in that truth, you get this universal intelligence, this universal wisdom breathing through you. Because the truth is, you've got all the answers already inside of you. The challenge is, do you know how to go and access them? And that's what we're now uncovering. So when we learn how to live now, nutrients, oxygen, and water. Fourth thing is, you've got to make sure that you're moving your body. And these are in no particular order. These are just 5 things. Your body was created to move. When you move your body in fun ways, that's the secret ingredient. Most people are being disciplined. I've got to train, got to do this, got to do that. And that's taking out the fun ingredient. Yeah. Why do children move all the time? They're not doing it because they have to. They're doing it because they enjoy it. And if I say to adults, how many of you out there need to be motivated to go and move? Oh yeah, that's me. How many are not doing it on a daily basis? Oh yeah, that's me. Yeah. I go and ask kids, why are you doing it? And they're like, what a stupid question. We're doing it because we enjoy it. Secret ingredient. So when you enjoy the movement, what you do is you release these endorphins. It sends a chemical out through your whole body. And guess what? You naturally feel good. Yeah. So most people have this negative association to exercise. That's right. And what does that mean? They're not living in the now. They're disconnected from the truth. Fifth thing is, and I've got about 15 things I want to share, but there's only 5 we're going to share now, is you've got to understand what meanings you're pinning on things, because that's your responsibility. The second you go and pin a meaning on something, that reality is going to open up. The challenge is most people are pinning meanings on things that are disempowering. So you asked me at the start, how did I get this energy? How can I have more energy now than what most kids have? You know, I've got 10 nieces and nephews. I wear them out. And why? Because I've learned how to harness this energy that they're just finding natural. But what they haven't learned how to master is their emotional intelligence.
That's right.
If you learn how to really open up to this truth, and you learn to train yourself to pin good meanings on things, all of a sudden, these realities are going to open up, and you're not going to be disempowered with a meaning that you've got and pinned on something. Because what I truly mean is that none of us can stop the challenges that we're going to go through in life. You know, we can create that balance, we can find that alignment, but when do we learn the most? Usually when we're challenged.
That's right.
So there's a higher part to yourself that's going to make sure that you're going to keep being challenged. But what most people don't understand is within those challenges, there's blessings waiting to be discovered. Within those blessings, you become empowered. And if we can accept what life is giving us, and we can really accept it, and we can say, okay, this is going great, I love it. Or this area of my life will be in challenge, because, you know, we've had some conversations that areas of your life are fantastic, but there's also other areas of your life where we're being challenged.
Of course.
But if we learn how to deal with these challenges and we don't create the resistance and we can let go, all of a sudden what you're letting go of is fear. You're letting go of doubt. You're letting go of self-awareness. You're letting go of not having self-esteem, not having confidence, or you're letting go of illness. You're letting go of toxicity.
Right.
When you learn how to let go of all that stuff, and we talk about a vibrational frequency, like if I take a cork and I pull that cork under the water and I'm holding onto it underwater, there's some type of resistance there.
That's right.
If I let go, what's going to happen to the cork? It bobbles straight back up. And that's what we teach people, is to let go of all the crap that's just not serving you. And when you let go of it, you naturally come up to a high frequency where you start to find the answers within yourself, just like what happened with you.
So what do you say to people who are listening to this thinking, I don't know, man, that sounds good, but, you know, do you find there's resistance?
Of course.
Yeah.
Of course, everywhere.
And what is the quickest way to get people through that? Because, you know, it takes a lot for somebody to decide to give up for 5 days and go on a program like that. But boy, oh boy, I would never go back.
Yeah,
you know,
you can't go back.
You can't
as
go
soon
back.
as you've experienced it, it's
just my decision making.
It hurts you more now not to live this way.
Yes.
Because you're now in a higher frequency where you're in control.
Right.
Because this is what most people really have to understand. They're pointing the finger, they're playing the blame game. They're like, you're the problem, you're the problem. The problem's outside of themselves. But what they're really, if there's 3 fingers pointing back, we have to become the change. When we become the change, it's like life can throw these bullets at you. Life can throw stuff at you, and it's just going to bounce off you. Why? Because you are connected to the truth. And in that truth, there's energy. In that truth, there's wisdom. In that truth, there's strength. In that truth, there's magic.
And the ability to change it. That's the key, right?
You become...
Skip, this has been an awesome session, huh? Thank you so much for the time here today. I hope everybody's really enjoyed this beautiful session. Tell everyone, the people out there, I'm helping them with everything from getting their mindset right to their psychology, to tactics, skills, tools, to start making money so they can get on with exploring in their life at a different level.
And it's so good you're doing this, because too many people are stressing around money.
Yeah, it's a huge stress. Do you know most relationships that break down, and by the way, they reckon 50% of marriages are ending in divorce. They reckon most relationships, it's all around the area of money, is the number one stressor. So
and nothing's going to break you down. Nothing's going to age you faster than stress. And this is what I want to teach people, that we can't stop this stress coming in. But what I can teach you is that it ain't going to get inside of you, and it's not going to knock you off mentally or emotionally or physically or spiritually or even financially. This is how you become unshakable.
Yeah, it's like, it's God, don't remove my problem, just make me better at dealing with them.
Boom,
right?
shakalak.
Okay, so tell everyone to camera how they can, because you did offer some masterclass trainings. By the way, thank you so much for doing that for, you know, the subscribers to my channel. I like to bring people on here that will add value. I think today's session's been immensely valuable. Look what it's done for me. So tell them what the next steps are for them so they can get the most from it.
Well, we've given value as much as I could in this short time we had. If they click that link, that's going to be in. I mean, first of all, they got to like this, they got to comment on this, subscribe to it. Why? Because you're going to keep bringing in other experts, and it's so important to find a good mentor that can really help you. In the description, you're going to put a link. In that link, all they got to do is click that link. That's going to enter them into me gifting them free of charge 4 masterclass sessions that are online. And you know yourself that to get that information, that's really going to get rid of all the noise. It's going to get rid of all the toxicity. It's going to get rid of all the crap that the modern world is giving people. This is going to give them the edge. And through those trainings, it's going to wake them up to more of the truth. And then they're going to be able to take action based on this information going in. Because as I said earlier, without them being activated, people are now drowning in this information, but they're starving of wisdom. And what we want is, and how does something become wisdom? Real simple. You own it yourself, but then you go and share it with somebody else, and then that ripple effect works through you. So what I ask is, you know, when people learn this, when you get this, go and share it with somebody else, just like you're doing with your team and your top CEOs around the world. Everyone is now benefiting because you're now the living, breathing example of what's possible.
And it all came from you, my friend.
Pleasure,
Skip
man.
Archimedes, thank you so much for being a part of the Lifestyle Trader Challenge here in the studio. Thank you for being part of our world. Thank you for the great gifts to everybody. Make sure you click the links from Skip. If you like this video, don't forget to hit like. If you haven't subscribed to the channel already, make sure you do that. Until then, we'll see you next time. When it comes to new traders, my general advice has always been to keep it simple, learn some risk management rules, basic indicators, start out small, but do people listen? Nope. Look, I get it, I really do. You're suddenly thrust into this really exciting world of sexy looking software with hundreds of indicators. It's exciting, it's new, and they're all saying, ooh, trade me. I won't tell if you won't. And all the while, there's me, only talking about a handful of the simplest ones, and it must be boring. But let me tell you something. This is an instinct you're going to have to learn to control, because there are literally thousands of indicators out there. In fact, let's try an experiment right now. Open a web page, go to google.com. In the search field, type in Forex indicators, hit return, and you'll quickly be pulled into a deep, never-ending vortex of confusion. It truly is a jungle out there, and you can get lost very easily. I can promise you, you're better off perfecting some simpler concepts before you jump headfirst into the black hole of indicators. But since it's been requested multiple times in the comments, and the fact I'm not your dad, today I'm going to be talking about one of the indicators that you have no doubt hovered your cursor over in a moment of curiosity, and it's called the Ichimoku Cloud, and that's coming up right here, right now. Welcome back to the Trading Den. I'm your host, Greg Secker, and we have just passed 47,000 subscribers. So I want to thank each and every one of you for your valuable contribution. Today, we are talking about the Ichimoku Cloud. Let's do this. First things first, if you're a Smart Charts user, you're going to find the Ichimoku Cloud by clicking on the indicators icon here. And then you'll see it in the list, roughly halfway down. Here it is. Click on it once to apply it to any chart, and then this monstrosity will appear. This is so ugly. I mean, what is that? That really is a face only a mother could love, isn't it? Okay, let me level with you here. Up to about a week ago, Ichimoku was something I'd learned about in the distant past. And when I say distant past, this is when I was trading on floors out in Australasia. More recently, I've seen it in the Smart Charts indicators list, and of course it rang a bell. But I just ignored it for the most part. I don't think it's something that's really ever resonated with me for some unknown reason. But then my content man said, Greg, we have to do a video about Ichimoku. Greg, everyone wants to know about Ichimoku. And I said, all right, fine. I opened up a new account. I started playing with it for myself again. Yeah, it was kind of neat. I strategized a little. I placed a few trades. And then this happened. Yeah, crazy, right? So let's show you how this indicator works. Ichimoku Cloud is a system of indicators, and there are 4 main parts to it. The first main part is these highlighted areas here, known as the Kumo Cloud. Yeah, cute name. Still ugly though. For the rest of the video, I'll be referring to this as the cloud. The second part of the indicator is this line here, known as the Kijun Sen. The third part is this line here, known as the Tenkan Sen. And the final part is the Chiku Span, which is this line here. Let's go through each part one by one. The cloud itself is the space between these 2 lines, which are known as the Senku Span A and the Senku Span B. We're not concerned with the lines themselves, they're not important. It's the space between them that is of interest to us. So let's bin the lines for the sake of this demonstration and to make life a little simpler for my animation team. Here's a few basic rules. When price is above the cloud, you may only take long trades. When price is below the cloud, you may only take short trades. When the price is inside the cloud, don't take any trades. Do people listen though? Nope. If you can't stop yourself taking a long or short trade when price is inside the cloud, or if someone is pointing a gun to your head, at the very least, use half the risk you normally would. The other 2 parts are the Kijun Sen and the Tenkan Sen lines. These more or less act like moving averages, but they are calculated differently. The Kijun Sen is the slower moving average, the Tenkan Sen is the faster. When the Tenkan crosses the Kijun upwards, that's a long trading signal. When the Tenkan crosses the Kijun downwards, that's a short trading signal. Remember though, the cloud acts as a filter. Even with valid crossover signals, you must respect the cloud. Long trades are not allowed unless price is over the cloud, and short trades are not allowed unless price is under or below the cloud. This rule will reduce the number of trades you can actually take, but the beauty of this is that it forces you to be disciplined, which, if you remember, is one of the hallmarks of a successful self-directed trader. Last but not least is the Chiku Span. Some would say this is the wild child of the bunch, but the Chiku Span is very easy to figure out. Imagine a chart leaving a breadcrumb line of closed prices 26 bars behind the current one. In fact, if you could pick up this line and move it across by 26 bars, it would fit exactly with the closed prices of all the recent bars, like this. Let's put it back where it belongs for now and note that it always ends at the closed price of the most recent bar, except that it sits 26 bars behind. The idea would be to look for a trade entry first, respecting the cloud of course, and then look back to see if the Chiku allows it. If you had a buy signal at a point where the Kijun and the Tenkan cross like this, and then you check the Chiku Span and found it was above price action, this would mean the trade was allowed. This is because the trend is deemed to be upwards when the Chiku is above the price action, and downwards when it is below the price action. And then how we use the Chiku as an exit signal, I'm going to go into a little later when I show you some live examples. Now, if you like that explanation of how the Ichimoku Cloud works, I suggest you click the link in the description below and get yourself a free 7-day trial of smart charts, and I'll tell you why. Included with the trial is several hours worth of the highest quality trader education material on the planet. There are modules that show indicators and strategies in a simple, easy to understand format like you've just seen, and it's all rendered in glorious 3D. It took a team of animators 2 years to create, and I can testify that there was quite literally smoke coming out of their ears when they finished, and you can watch it all for free as a gift for being a subscriber to this channel. So now you have a basic grasp of how this indicator works. Let's fire up smart charts take it for a spin. If you look at how I've set the screen up, and if you look at my screen layout, if I click on that, you'll see that I've picked this screen layout where we basically have two screens which are not vertical, they're horizontal, one on top of the other. The top screen, as always, is the daily chart, which is always daily chart with the 50, which is the quarter of the year, on the 200. Remember, there's 200 or approximately 200 trading days in the trading year. So we know that when we've got the price above the 200, you can see on the Aussie dollar as a classic example, it's now dragging that 50-period moving average above the 200, which of course is our long signal, our sort of long casting signal, from which then we drop into the screen below, which is where we've got the Ichimoku set up. Now I'm just going to show you how you add that. So if you click on indicators, and you'll see I've got Ichimoku cloud set up on here already. I simply just type in Ichimoku and it brings it up. I've edited it slightly, and I'll tell you what the edit is. It really is a cosmetic alteration. I've taken the Tenkan-sen, and what I've done is I've made it just a little bit lighter blue, purely for recording purposes here today, on a dark blue background that we use on smart charts. I really want that to pop and be contrasting, because it's that correlation, or the correlation of where Tenkan-sen is in relation to Kijun-sen, and when they cross, which is going to give us our long and then our closing position. So obviously on the Aussie US, we are looking for a long position. Then my cloud coloring is Senku A is going to be green for obvious reasons. That's the period of time we should be long. And then my Senku B is red, as a red cloud. Obviously that's when we should be short. It's the size of those clouds which really give us the intensity behind the move. So the bigger the cloud, the more likely the trade is going to work out in that direction. So a big green cloud, we'll expect long positions to work out well. A big red cloud, a Senku B cloud, and we'd expect short positions to work out well. And then the Chiku indicator, I hope you like my Japanese, is the purple line indicator, and that is the one which tells us the early indication of when to close the trade. So let's put it all together. I've added that onto the chart and show you a few examples where this is good. Now you'll notice if you look at the top right-hand corner of this bottom chart screen here, you'll see I'm looking at the 4 hour, that's the H4. So every bar on this chart is effectively 4 hours in time then. This is not something you want to be looking at on the 30-minute or the 15-minute or the 5-minute. That's just going to be too erratic, and it's basically going to look like a big spaghetti junction on your chart screen. So I want really clear signals. This is ideal for somebody that doesn't have a lot of time to day trade. They want to put positions on, they want clear signals, and they want a good idea of when this trade, or if this trade is going to work out. They want some intensity of that cloud to know, is a long likely to work out, is a short likely to work out, and then some early indication as to when to close that trade and grab those profits. So let's have a look at the Aussie dollar starting out. So you can see, first of all, that blue line, which I've slightly or lightened slightly just for the contrast against that London backdrop in blue that we've got on the chart here, that Tenkan-sen. That Tenkan-sen says as it crosses up through the Kijun-sen, which is that orange line, that would be our, if you wanted to treat this as a trading strategy, it's more of an indicator, let's not forget, but this would be your long signal. So you'd be long here only if the cloud is beneath price action. So this price action here must not be in the cloud. As I said earlier on in this training session today, if the price is within that green cloud, you'd really want to put half of the risk on the table, because you are bringing risk into the trading arena. So this is set up perfectly. Price is outside of the cloud, which means that the big green cloud, as it escalates along and grows in size, gives us certainty that there is power, there is buying pressure. The buyers are winning the war in this market. We've got the entry signal, if you want to use this as an entry signal, and it is a simple entry signal. This really is not for somebody that's in and out within 10 minutes. This is somebody who wants to leave the trade on and check it tomorrow. It's that type of trading strategy. But what you're going to see by doing that, of course, is that it gives you a much larger pip pull than it would jobbing in and out trying to grab 10 or 20 pips. So for those of you that don't have a lot of time to trade during the day, I think some of you are going to love this. Others of you are going to find this a little complicated. I don't think it's complicated. I think the terminology is complicated purely because I'm British and it's Japanese. But if you can get your head around the terminology and just look at what it's giving you some nice clear signals here. And for many of you that requested this on the channel, this is how I use it, and I have a team on our trading floors around the world use it. And it's in these trending market conditions, you can get some really fabulous outlooks here. So let me show you what that means. It means, first of all, that Tenkan-sen is giving you the long signal signal through the orange line, which is the Kijun-sen. So you would be effectively long here as long as price, this is price, above the green cloud. Now, as the green cloud grows in size and volume and price is further away from the green cloud, we're still long. So you're in here for many hours, sometimes even many days. That's how long this can last. I really do recommend you start with the 4-hour chart first. You can drop down to the 1-hour chart. I would not recommend that. Stay in the 4-hour chart because you're going to get nice clear signals, and we're going for big pip pulls here. You're going to see what this looks like, but this is not pulling 10 or 20 pips. This is pulling much more than that, a much greater range of pips. And then don't forget, of course, your stop, it's going to be some way away underneath the cloud. So, of course, the maths, if you can imagine, will ensure that your trade size is not gigantic. It's going to be within range to keep your risk at a sensible 2%. I'll show you how you do that in smart charts in a moment, so you understand how to place the trade and how to trade size it. But most importantly, this is your long signal. Price stays above the green cloud as it goes up. Notice the separation of the Tenkan-sen and the Kijun-sen, which means there's a lot of power in this. This has been a reversal. We look up the daily chart here where we had that retracement from that phase 2 back to the phase 1 movement. Lots of pressure building up, cloud starting to grow, separation of line. That means you wouldn't want to close this trade yet. Hang on in there. Many of you have written me in and left comments and suggestions and questions about when do I close my trade? When do I capture my profit? You know, what is the right balance of that seesaw? Well, look, one of the biggest old adages of all of the trading gurus around the world is that people cut their profits too quickly and they let their losses run. Well, this ensures you don't do that. And for that very reason, we rank it here on the channel as a very useful indicator because it tells us, is there strength? Is there real strength behind this move? And when is that strength coming to an end? So if we track this across, we can see the blue through the orange line here. That's that Tenkan-sen through the Kijun-sen. We hold it. Price moves up. You can see the separation of those lines. And here's the interesting part. There's 2 exits on this trade. Now, I want to really draw your attention to them. The first exit, and this will be one that many of you on this channel will want to go for, is when this Chiku line, the little cheeky Chiku line, the purple Chiku line actually touches price. That could be your first exit. Now, you could ignore the Chiku line and say, well, actually, I'm not going to exit so early. I want to hang in longer. And in fact, I'll take my profits on the table when the Tenkan-sen, that's that blue line, keep using these terminologies, and the Kijun-sen cross again, which is kind of around here. Let me show you the difference, the pros and the cons of both. If we take out our drawing tools, let's grab that, and we go down to the measure, and I want to do time and price range, and I'm going to take it from where we would have, let's say, entered the position based off the crossing of those original Tenkan-sen and Kijun-sen lines. So that would be here. And if I then move this up to when the Chiku line takes us off the table. Now, look, there's a pro and a con here. The pro is you're getting a relatively quick profit. Let's just take a quick look here. You're getting 438 pips, which is not insignificant in a space of 47 hours. So let's call that 48 hours. In a couple of days, you know, you're pulling 200 pips a day. That's pretty impressive. So it would be an entry here, an exit here, and grabbing 400 pips. So clearly, it's a very strong move that we're looking at. And that's just happened in the last couple of days here this week in the UK. Or anywhere in the world for that matter. This is the Aussie dollar. We're trading from the UK. Of course, you can trade from anywhere. But that would be the first exit. Now, if we decided actually I'm going to ignore the Chiku line. In fact, we could even remove the Chiku line from this so it doesn't distract us. I think users of my channel, and I hope I'm talking to you personally, I hope that we describe things in such a way whereby you can use other indicators. Clearly, I don't want a big dog's dinner all over the chart. I want to keep things as clear as possible, and clarity is better. However, I kind of like the way the Chiku line gives you that early indication. Now, 2 other things to be aware of. If we didn't use the Chiku line for the exit and we said, actually, I'm just going to enter on the crossing of the lines here, which is that Tenkan-sen and the Kijun-sen, and then when they cross back onto each other, which kind of puts us in this territory here, you are similar kind of profits, maybe 473 pips. So the Chiku is kind of, yes, it's getting you out early, but just don't forget, the moment you come out and you crystallize that profit, risk has been eliminated. So what the Chiku is allowing you to do is maybe you're not going to get the full pip pull that you would get if you waited for the Tenkan-sen and the Kijun-sen to cross again. But, you know, whilst that trade, don't forget, anytime a trade is open, there is risk on the table, and that's your risk. That's monetary risk. So from a trader's perspective, I always think, when we call ourselves traders, we really are. We're either gamblers or we're risk managers. And traders are risk managers. And gamblers are people who don't really factor in risk too much. That Chiku line is helping you take the early profit. In actual fact, when you consider the amount of additional time you're having to stay in this trade to benefit from the Tenkan-sen crossing down through the Kijun-sen again, you're paying brokerage fees, you're keeping the trade open for longer, there's more risk on the table. A sensible, self-directed professional trader says there's a decent profit. If the Chiku line is giving me the exit, let's get the money off the table, let's crystallize it, let's bank it, and then let's move on to another trade. I much prefer that approach. So in my opinion, keep the Chiku line on here because you're getting a profit quicker. There's not really much in it. And if you factor in as an intelligent individual, the time that you're leaving yourself exposed to the market, there's intrinsic risk there. And of course, there's financial risk. Of course, you're paying brokerage fees, you're paying swap fees, you're paying overnight financing fees. And if you factor that all in, is it worth the additional 20 pips in this example? My answer to that would be not really. Just notice the cloud always is ahead of price by 26 bars. So we know that price is the cloud here is telling us there is still strength here. So you've got to weigh up your options here. Do I continue to trust the cloud? And the cloud says things look great, because a cloud that's big like this can suddenly become quite small if there's a big market reaction. I'm all about, if you can make 400 pips in a couple of days, grab that money. Use that Chiku line and get your cash off the table, bank the cash, and then go on to something else. Leaving yourself open and exposed, I think, is not the most intelligent idea. But this certainly indicates that there is further upside potential. You have to understand this has to factor into your trading plan, and your trading plan should drive this. If your trading plan says, look, I'm going to use this tool to grab profits, but my maximum trade length is around 2 to 3 days based on current market volatility and current market volumes and movement, then that's what you're going to do. Let's look at the euro dollar now. Same sort of thing, as you can see. Very easy to show you the Ichimoku cloud this week because of clearly we've got some nice cloud formations. You can place any trade and you can leave your take profit way up in the sky. What you can't leave way up in the sky or way down in the depths of hell, of course, is your stop loss. And so let's just talk about that for a second. So let's say I was going to be long at this level. Of course, price is all the way up here right now, but let's just kind of dummy play this a little bit just so you can understand how this would be done. So I would like my stop loss to be underneath the cloud here. So if my stop loss is here, let's say my entry would be here. So you can see, for this position, so I'm taking a long here. I've got my, one sec, folks. There it is. I thought I was a little bit too far down. So I'm taking like a 53. So I'm sitting the other side of the cloud. I've got a 53 pip stop. My take profit would be somewhere like here, but don't remember this. I don't know when the Chiku line is going to hit price. I can never predict that. So I might decide to keep my take profit just well out of the way. All I need to really care about in order to trade size this is the buy entry or the sell entry and the stop loss. The difference between where I get in and where I get out for a loss is my risk. Don't forget that. So in this example, and similar with the Aussie, if I'd have listened to what the system told me, what the Chiku line told me, I'm really risking, say 64, maybe 70 pips of risk, okay? In order to capture, maybe as it says here, 404. So the risk reward here is certainly well in our favor. But just remember, the larger the risk that you take from the entry price to the stop loss, the greater that risk. Of course, that must impact your trade size. Remember, trade size is automatically calculated for you on smart charts. You don't need to get your pencil and pen out for that. Certainly, you can see as I move those lines around, as I move my risk and entry lines around, it updates and changes everything on the right-hand side. If you've got smart charts set up with your trade ticket appearing on the right-hand side, you can change that in settings and have it appear on the left-hand side if you want. I like it on the right-hand side so I can focus on the chart first. So wherever I move those lines around, it will adjust that, which means if you're somebody that's out there that's watching this channel and you aren't using smart charts, first of all, you must be the craziest individual on earth watching this fabulous software do all the work for you and then sit there on bloody MetaTrader. You literally must be blowing your brains out. But if you are blowing your brains out and you are someone that is starting out and you haven't got the funds to use an intelligence system like this, then you need to understand the formula of how to calculate your trade risk. Basically, the greater the risk on the trade, the smaller the trade size. That should obviously make sense. So, if you're trading a $10,000 account or a dummy or a demo $10,000 account, as some of you are as you're starting out, you want to remember that you don't want to be risking more than 2% on any one trade. Well, 2% of $10,000 is $200. You would take that $200 and you would divide that by the trade risk. If the trade risk in this instance is 50 pips, let's say, for example, then 50 goes into 200 4 times. Your trade size would be £4 per point, or $4 a point if you're trading in any other parts of the world. So that's how you would calculate the trade size. That math, I think, is ridiculous to sit and have to work all through when a system as intelligent as this can do the work for you. So remember that with this Ichimoku cloud on the 4-hour chart, you are factoring in more volatility. You are keeping that stop outside that cloud, which of course, with that cloud growing in size, it means the risk is going to be a little bit bigger, which means, of course, to keep risk, importantly, at 2%, the pounds per point, the trade size, the contracts, the lots have to be smaller to account and make sure, therefore, that we're only keeping our risk and we're not exposing ourselves to more than 2% risk on that $10,000 account. Of course, at £4 a point, you would be, you'd have made £1,600 on your trading account. 400 times 4 is, of course, £1,600, which, of course, on a $10,000 account, this trade alone, by risking 2%, you'd have made 16% on your trading account, which I think by anybody's scale is a good return on investment of your time. So that is how we use it. Let's just kill that because I'm not going to place that trade. That's already happened. I'm just going to show you a couple more. So sterling, same picture again. Now, interesting, you can notice here, right, what is the problem with the sterling cross here? The problem here is you wouldn't enter this trade. I wonder if anyone can figure out why that is. Well, I'll tell you as you're probably entering comments, and please do enter comments as I go throughout these throughout these examples. Look, you are very much in the Senku B cloud, which is the red, which of course is the sell cloud, which is the one which says, look, and you can see this is that turning point where it moves from one to the other. So whilst you'll have had your cross in the red, we don't place trades when the price bars are in the clouds anyway, but of course you would never go long while price bars are sat in a red cloud. So sterling, you would not have caught on the Ichimoku cloud strategy. You would have caught the Aussie, absolutely. You would have caught the euro dollar. And looking just at the Kiwi now, that same thing, the Tenkan Sen cross with the Kijun Sen, this happens just as the cloud is forming. Now look, you don't have to buy when the lines cross. So just be aware of that. If they've crossed and you're in the red zone and now they're starting to separate and that green cloud is forming, you can go long. And there's nothing that says when the lines cross, that's when you have to press the button. That's ridiculous. The strategy here is if the line's crossed or is crossing or has just crossed and those lines are separating and that cloud is building up, you can enter that position. Remember, your stop is below here, below the cloud. That's giving you a really serious safety net. Some of you may wish to be more aggressive. I'm not interested in you guys being aggressive. I want you guys to be safe. So I think a stop outside the cloud is safety first. If you want to be closer to price action and then do an analysis on, okay, well, where really is support, which in this market you could see it would be around here, you could place your stop there. It depends on your level of aggression and it depends on your level of risk appetite. So they're the long trades. Let's have a quick look at a short position, which of course is the dollar Swiss. Let's bring that up. And you'll see dollar Swiss here. Okay, how and when do you enter this? Now, we don't enter. Remember, when price is in the cloud, not a time to enter this position. We want to enter this when, of course, the Tenkan Sen has broken down through the Kijun Sen. That puts us in one of two areas. One would be here. Another one would be here. Remember, we're using the Chiku when it comes back, and the Chiku right now is here in line with current price action. When that touches the price, as it hits those price bars, that would be your early exit. So you could be short here, running this position, again, stop. Now, you can do two types of stop. One could be above the range, so above this resistance range here would be a sensible place to put a stop. But again, keeping the more risk-averse approach would mean placing the stop above the cloud. Remember, the cloud is now forming and getting bigger. It does reduce the trade size, which means you're going to get a smaller profit, but of course it keeps you safe, and I'm much more interested in you doing that. As much as I've enjoyed expanding my knowledge on this indicator, I'm sorry to say I think that this love affair is coming to an end. I always say that you should use strategies and indicators that resonate with you, and that means you personally. Each one of us thinks in a unique way. Our brains are wired differently, and this indicator is just not something I see myself using regularly going forward. Those of you who know me, I'm a pivot trader. I love pivots. I love fib pivots. I love fib levels. And of course, you know I love the 180 phase changer. I love the trend wave. I developed them years ago in concert with a group of traders, and that is in my core. So it's something I'm not going to jump away from. That all said, I made this video for you guys because you requested it. So feel free to keep sending in your requests, and my team and I will do what we can for you. Okay guys, if you like this video, don't forget to hit like. If you're not a subscriber already, get yourself on the subscription list. You can do that by hitting subscribe. And if you have any comments about this video or any other videos, please do put them in the comment fields. And remember, like I said earlier, you can get yourself right now a 7-day free trial of Smart Charts by clicking the link in the description below and get all the inbuilt training on me free of charge. That's my gift to you. Until next time, I look forward to seeing you in the trading den.
are 3 pieces of advice from eToro users on how to trade safely during a period of increased market volatility. First, monitor your positions frequently.